the issue going forward now is how much is the economy going to slow? How much is nominal GDP going to slow? And what does that mean for earnings?
The most likely scenario remains that the economy is going to navigate through without going into recession.
We are going through the different cycles and parts of a bear market, but this is a process that still has further to play out.
We do not expect that the Fed is going to really dramatically reverse course and cut rates.
The ECB now has to do the best that it can, which means hike rates.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene. I'm Jonathan Ferro, together with Katie Lyons. Bramo back at some point next week. Futures up by 0.2% on the S&P. The dollar weaker again. TK Netflix in the pre-market up around about 7%.
Yeah, 70% down from the top. It's not that big of a lift. I don't know what to make of it, John. They still lost 1 million subscribers. To me, it's sort of old news, but certainly it was relatively good news that we got out of them. It launches us into the tech story that we get here in the next number of days. Just did a chart on that, on the growthiness of technology. But, away from ECB and all that we're going to talk about, John, the fact is equity markets have left the bears silent.
Reed Hastings nailed it, didn't he? We're talking about it losing 1 million instead of 2 million. Our excitement is tempered by the less bad results. Yes. That stock's been hammered, a super low bar. Looking ahead to next week, Tom, Tuesday, Microsoft and Alphabet, Facebook on Wednesday, Amazon and Apple next Thursday. What are you looking for?
I'm looking for a view into China. It's going to be fascinating to see the micro tone and the conference calls and the guidance forward on what's very important for them, which is the growthiness, the revenue gain that they can get out of China, plus going the other way, the supply shocks. But what I'm really looking for there is this the quarter, John, where they become ever more blue chippy and really start talking about what are they going to do with all the free cash flow?
You mentioned China. Let's talk about the mortgage mess over in China. Katie
tangible.
Lyons, the loan boycott. We're calling this a loan boycott. Apparently it spreads.
Yeah, that's effectively what it is. It started with the home buyers not paying their mortgage payments because their homes aren't actually finished. The developers aren't finishing the projects. Now it's spreading to suppliers who supply those builders with materials. They aren't paying either because they're not getting paid. They can't afford to. It's just spiraling, John. And the question is, COVID zero, one issue China is facing. There is still property turmoil out there, and that is a huge portion of the Chinese economy.
Things are getting messy over there, and they're getting messier by the day. From New York this morning, good morning to you. Here's the price action on the S&P, up by a couple of tenths of 1%, following a really decent pop in yesterday's session, the biggest one-day gain on the S&P. Going back to late June, in the bond market, yields lower by 3 basis points, just in and around 3%. On a 10-year over the last couple of days, 298.56. Euro dollar positive once again. This is 4 straight days now of dollar weakness, Tom. You've got to go back all the way to February to see a streak like that.
It's going to be really interesting to see the reaction here, and also I guess as a proxy, John, the German 10-year, and I'll let you pick the Italian duration to see how they play into tomorrow.
It looks like Draghi's clinging on as the Prime Minister.
Francine has to translate
Katie,
it for
clinging
me.
on. I've got no idea if he's going to stay or not. He's signaling he's willing to.
He's signaling he's willing to. He says this coalition can be rebuilt, but will it be rebuilt? That's still the question. There is a lot still going on in Italy throughout the day that we will try and stay on top of. Separate to the Italy situation, though, a lot of events to watch as well, including here in the U.S. with economic data. At 10 a.m. Eastern time, we'll get existing home sales. And remember, we are coming off of 2 really weak home-related data points here in the U.S. First, you had home builder sentiment, the weakest level since May 2020 on Monday. Then yesterday, building permits were down 2% both month on month, both missing expectations. So how much does this data also speak to a cooling in the housing market in the face of higher mortgage rates? Then at 11 a.m. Eastern time, we'll head over to the UK for the final Tory ballot, which will be announced. The final 2 contenders to replace Boris Johnson as Prime Minister. Now, Rishi Sunak, the former Chancellor, has long been the front runner, but it actually looks like Liz Truss may be the second candidate. She's been catching up to Penny Mordaunt. And of course, that Citigroup note earlier this week said Liz Truss is actually the most dangerous from an economic perspective for the UK, considering she wants to cut taxes and disrupt some business operations. Then finally, after the bell, we'll focus on tech earnings. A second one reporting, that would be Tesla. Remember, this is a stock down 30% year to date. It has been dealing with a number of headwinds, not just being a growth company pressured by higher rates, but also supply chain challenges and the shutdowns in China weighing on the factory in Shanghai. So we'll really look for the outlook on that in the second half to see if the picture gets a little bit better for that EV company.
John, really quickly here, is they always picked a prime minister this way?
Well, they pick a leader of the party this way, in the Conservative Party.
This is normal.
And it just so happens they have a majority right now, so the leader of this party will become the Prime Minister.
Can we do this in America?
I think
like
you'd have to change the system to a parliamentary one.
Somebody disappears? I mean,
you like the idea that we don't have these 2-year-long primaries? Is
love
that what
it.
you're suggesting?
It's great. No, but every 6 days, somebody's, goodbye.
They're dropping out. Goodbye.
Yeah. Goodbye.
I'm with you. Brutal British politics, Tom.
Yeah.
Brutal. Yeah. Futures are positive, 0.2% on the S&P. We carry you down to a big ECB decision tomorrow. We can do that with Elsa Linios, the global head of FX strategy at RBC. Elsa, tomorrow, am I trading the ECB or Nord Stream 1?
Oh, there's so much event risk, isn't there? But it does feel like we got a lot of the clues for the event risk actually coming all together yesterday. So sources suggesting that Nord Stream will be reopened, albeit it remains to be seen at what capacity. And then sources again suggesting the ECB is considering 50 beeps, and we're getting some hints of what the anti-fragmentation tool might look like. So for all the kind of build up into tomorrow, and there's still a lot to watch, we have certainly seen a lot of the hints and clues coming ahead of time.
We're looking for the theory of fragmentation, Elsa. And then there's the application of the theory. Does it sound doable to you? Whatever plan they come up with, explain to me how it's doable.
So there are a few big questions. I mean, clearly what's been talked about, or the sources been suggesting something that would be pretty monumentous in terms of size and scope, talking about very loose conditionality, merely countries sticking to the Growth and Stability Pact. But of course, there are two big ifs. One, will that get past the German Constitutional Court? As we know, MT was challenged, all the previous programs have been challenged, they passed, but this would be a further step. And the second is what happens on the political front, because it's all very well saying a country needs to be abiding by the Growth and Stability Pact, but there's certainly a lot of populist parties across Europe that have no intention of doing anything of the sort.
As we talk about the euro, obviously it has been substantially weaker at the same time that the dollar has been stronger, and there's a question of cause and effect. Elsa, on this program yesterday, we were speaking with Andrew Sheets of Morgan Stanley, and he said he thinks the dollar index could go out to 112 in the third quarter, which was kind of a wow call. John asked the question yesterday, where does that put the euro if the dollar strengthens to that extent?
I mean, there are certainly a lot of scenarios where euro-dollar could weaken materially from here. They're the more extreme scenarios. We're talking about total gas cutoff from Russia to Europe, deep European recession. And under those conditions, of course, you'd expect to see euro-dollar trade quite a bit weaker. It's not our base case scenario. We actually started the year with a call for parity, and that was a kind of forecast from December. And so being where we are now, it kind of feels like the bulk of the move is behind us. Our target at the moment is something around the 97 level. But of course, if some of those more extreme tail risk scenarios pan out, then yes, euro-dollar could be trading even to an 80-something handle.
So every single morning I keep seeing more and more news about Europe, whether it's the ECB or Vladimir Putin and Nord Stream 1. Not enough on China. Elsa, what is going on in China with the mortgage market, this growing loan boycott, and what on earth does it mean for foreign exchange markets?
Yeah, I heard you guys talking about it at the start of the program, and it's fascinating what's going on, because it's so different to the way mortgage markets work here in the UK or in the US, where homeowners or home prospective owners are actually paying for an apartment before it's even been finished being built. So I think there are kind of two sides to it. One is we're watching for what it means on the economic front. I mean, clearly we're seeing some downward pressure coming on commodities, and that's having a knock-on impact across the world. But from a currency perspective, the renminbi, it's still such a heavily managed currency that there isn't that direct link you would see in the rest of the world. There's still this widespread expectation that the government will be delivering substantial stimulus ahead of October. We're still pretty cautious on how far that can go given the zero COVID policy. And so in general, I think, investors, particularly as the Fed hikes, are kind of shying away from the renminbi somewhat. So
wonderful to catch up with you ahead of tomorrow. Asalinos there of RBC. TK, to make a forecast on Europe right now, you've got to make a forecast on what happens with European gas supplies. I've got no idea. To make a global economic call, you've got to make a call on what happens in China. Again, I've got no idea.
I've got no idea. And what I would say, folks, in the last 24 hours, and trust me, I've struggled with this. I know many of you are as well. the debate of gas supply and Mr. Putin centers directly around sanctions. It's almost a Dan Tannenbaum issue to discuss. John, what I would point out, John, going into tomorrow's truly eventful ECB, that we can celebrate by understanding it's Snooze Fest Wednesday. We've shifted it one day forward.
Thursday,
just it's not going to be a snooze fest at the ECB tomorrow. We're really going to be on top of this. And, he's too shy to mention it, Kaylee, but John's got some serious first-order knowledge of what ECB does.
Of course he does. I'm just wondering, Tom, if the beige suit only comes out for Snooze Fest days, so we won't be seeing a beige suit tomorrow. Dark suits
I don't know. I've got a wardrobe consultant who may, dive into that tomorrow. We'll have to see.
Is this the last day? You said to me this morning, TK came up to me this morning, he said, final day. This is the final day I'm going to wear the tan suit and then I'm retiring
Well, I've got a number of tan
suits.
I'm retiring this one because I've gotten larger is sort of the way it goes. And also it's ancient. Nixon was president when I first wore this suit. Yes.
Really?
Tom, if you take the show on the road to a beach, I feel like you should bring it out of retirement, though. If you get one of your road
we
trips,
have other
maybe
beige.
to the Hamptons.
We have other beige suits.
TK slowly going quieter and quieter. Kaylee, I think you're upsetting him.
Closet of where the hell's Bramo?
Where is Bramo? I actually
Everest.
Don't know where
seriously.
Lisa is.
Seriously, it's really cool. I don't think she's going to the top of Everest. It was deemed too risky.
She's not?
No, you can go and go up, but not go to the top because, you get up to the death zone. She's not going to the death zone, John. She's going to the gloom zone.
The death zone is no joke.
No, I know.
People who aren't familiar with that, that's the point of the climb where you get to this issue where it gets so cold, Tom, that if you stop, that is it. And getting down is half the battle, but she is going to the gloom zone, which is... she's permanently in the gloom zone, right?
Yes.
Although she would say that's where reality lies right now, Tom.
I know. She's got her Coleman thing. She's got the little lantern with the poofy lantern.
Thanks for
Coleman stove,
The sound effects, the suit and everything this morning. Can you tell it's a quiet one going into the ECB? I can tell you it's a beautiful one in New York City. It is going to get steamy a little bit later.
Tomorrow's Steamy Thursday.
From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. In the UK, Conservative MPs will decide today which two candidates will face off in the battle to replace Prime Minister Boris Johnson. On Monday, former Chancellor of the Exchequer Rishi Sunak topped the fourth ballot of Tory lawmakers. He was just 2 votes short of the threshold that would guarantee him a spot. Foreign Secretary Liz Truss is now the favourite to join Sunak. She's been closing the gap on Trade Minister Penny Mordaunt. In Italy, Prime Minister Mario Draghi has told the Senate that his coalition can be rebuilt. That's easing concerns that Draghi will quit the government and throw the country into chaos. Markets rallied after his comments. Last week, Draghi said he wanted to resign because he didn't have the backing of all the parties in his coalition. Vladimir Putin has signaled that Europe will start getting gas again through a key pipeline, but the Russian leader has some conditions. He says that unless a dispute over sanctioned parts is resolved, gas flows will be tightly curbed. Europe has been waiting to see whether gas resumes flowing Thursday, when maintenance on the Nord Stream pipeline is set to end. And shares of Netflix trading higher. The streaming giant says it lost 970,000 subscribers in the second quarter, but that was less than half of what Wall Street expected. And Netflix says it will add 1 million customers in the current quarter. Meanwhile, the company plans to introduce a lower-priced version of the service with advertising around early 2023. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The world is going through these two major shifts, one on interest rates and bond yields, and then on energy, it's reducing that dependence on Russia, which is a huge shift for the world, and it has, I think, several more innings to go to really get it right.
Wonderful to hear from David Malpass, the president of the World Bank, from New York City this morning. Good morning with Tom Keene and Candy Lyons. I'm Jonathan Ferro. Bramo back next week. Futures up 0.2% on the S&P. On the Nasdaq 100, positive by a third of 1%. Yields in 3 basis points lower to 298.74. The euro just a little bit stronger into the ECB tomorrow. Euro dollar 102.36, positive by a tenth of 1%. 4 days of dollar weakness. Vladimir Putin, the Russian president, Tom, signaled that Nord Stream 1 could come back online again with some conditions and maybe at a lower level. I understand that if the pipeline part that has been caught up in sanctions isn't returned to Russia, the president said the link will only work at 20% of capacity as soon as next week.
And there's not one part, but there's 2 parts.
As I understand it,
by part, folks, we're talking about some mechanical piece or something. I don't know.
Next week, another part that's now in Russia needs to go for maintenance too.
I don't know.
You keeping up with this, Tom?
I'm trying.
I'm struggling.
I thought, can we send him a case of WD-40 and that would sort of get it solved.
You think that'd help?
As well.
Get things moving again.
Yeah, get things moving as well. We love to bust Anne-Marie Horton's chop. She's our Bloomberg Washington correspondent, and she's far too young to have the earned credibility of mileage in Europe, mileage in the Middle East, and indeed mileage across all of the challenges of the war in Ukraine. She joins us from Washington. And Anne-Marie, what I think is so important is what was missed yesterday within the American media. And that was Mr. Putin and Mr. Erdogan and in Iran a meeting. What did you make of the image that I saw last night in Bloomberg that was completely underreported in the American press? What do we make of this moment?
Well, you just saw the image there of the 3 leaders together holding hands, and that is an image of President Putin showing the West that he is not fully ostracized, right? And it's also with a NATO member who sometimes have a little bit of tangled relationships. The image that stuck with me, though, was President Erdogan having President Putin wait. And you saw how uncomfortable this was for Vladimir Putin. This is a man who used to have the Pope, Queen Elizabeth, Chancellor Merkel, journalists like myself wait for him to show up for a meeting or interviews, and now he was the one being left waiting, and he doesn't have the same power he used to wield. And that was the image that I think struck a lot of individuals.
How's Mr. Erdogan doing? This is a guy who grew up rough and tumble in Istanbul, had a spectacular early Erdogan. I'm calling it 2002. I'm looking at lira as one barometer, 17.59. Not in collapse, but what an ugly moment economically. Does he have any power, any say at that meeting yesterday?
Well, ugly economically in Turkey when you look at inflation numbers and the lira, of course, but he does have say because right now Turkey's been at the center of trying to broker a peace agreement, which many have poured cold water on. But right now what is really front and center is an agreement to try to get grain out of Russia and out of Ukraine. This is something the Europeans really want to see done. And Erdogan is the one that is leading these talks and is trying to get Putin to play ball.
John, I think the American media really missed this moment yesterday. I think it was more than a huge deal.
Let's not miss this moment with the European Commission and Ursula von der Leyen speaking right now. Confirmation of what we reported yesterday afternoon here at Bloomberg. The EU proposing a 15% cut in gas consumption on supply from Russia and the concerns around that, Tom. This is under this title, Save Gas for a Safe Winter. Tom, this will have to be approved by member states, but that's the proposal. Let's cut things back 15%, save gas now, and hopefully get through a tough winter.
I mean, Anne-Marie Horton, do they have the power to do that? This is not the United States where we have a very cohesive climate program. That was a joke, folks. But, you've covered this with Maria Tadeo. Do they have the power to affect, what is it, John, a 15% cut in gas consumption? 1.5.
They don't have a choice. They are running on stockpiles right now in the summer that they would need to be used in the winter. And the biggest pipeline going into Europe, Nord Stream 1, is not working right now. There are no flows. And while President Putin has made the clearest signal yet that those flows would continue when it opens up for maintenance, he has these contingencies attached to it about this part you and John were talking about from Canada. And if that part doesn't come back, that had to deal with sanctions, it's 20%. Putin wants to keep a little bit leverage, I believe, in the tank, in the pipeline. But, you know, what Tim Ash is saying, that he wants Europe on its knees to make sure they stop their support for Ukraine. And he will certainly use gas, as he already is doing, as a geopolitical weapon. So Europe doesn't have a choice. And we've heard this from weeks from European leaders and also energy executives telling industry and telling consumers that they need to start conserving energy because this winter is going to be grim.
Anne-Marie, President Biden's done a good job of keeping everyone on side when it comes to putting sanctions on Russia. He's avoided embarrassing the Europeans. The Europeans haven't broken just yet. Do you sense that job is going to get harder as this year progresses?
Certainly. You can already see it now breaking in Italy, right? Mario Draghi is very much so on board with the Biden administration's plans, especially when it comes to the price cap. If he was to exit, who are they going to be dealing with? Remember, Italy, there's a strong population there that definitely leans a little bit more with ties with Russia. This dates back to the Berlusconi-Putin days. And it's a difficult one for Italy. This is what, their 67th government since World War II. And with Mario Draghi, they had a strong ally. When he was here just a few months ago, he was in the White House talking with the Biden administration. He was given an award by the Atlantic Council. Treasury Secretary Yellen came out, spoke fondly of their days as economic students and how they are working together to support Ukraine. You can already see potentially these cracks. And then you're going to have a cold winter and tell people to ratchet back energy use. This is going to get very difficult for Europe.
Anne-Marie, AMH down in DC. Anne-Marie, thank you. Numbers we expected to see, Kaylee Lines, but there they are. Confirmation of them. A 15% cut. That's the proposal from the EU Commission.
Yeah, it's time to start taking action on demand, John. For so long, the conversation in Europe has focused on supply, on securing supply wherever they could get it. Now the conversation has to become one about the other end of the spectrum, the demand one, to avoid having to ration largely the natural gas supply that they can get when it's still a giant question mark what those flows are actually going to look like.
Enter President Lagarde into the room. It's on tomorrow. How many times have we said this? That decision tomorrow, is there a harder decision for a central banker to make right now?
Given the theory of the ECB, no, it's absolutely historic. And folks, you know, we're making a joke about it. It is Snooze Fest Wednesday. I want to make that clear. But into tomorrow, John, what will you listen for in the press conference?
Oh, Tom, there's so much. We've got to talk about the anti-fragmentation tool, how they cap Italian bond yields breaking out. I think that's going to be really, really difficult. At the same time, do they have to commit to another move in September, potentially 50 basis points? That's the talk at the moment, I think, in FX circles. And then the big one for me, what's more important to foreign exchange? Rates, or what happens with Nord Stream 1 and these gas issues that they've got at the moment. Ursula von der Leyen of the EU Commission saying a full cut-off of Russian gas is the likely scenario. From New York, this is Bloomberg. Live from New York City this morning. Good morning on TV and radio. Here's the price action for you. Positive by a little more than 0.1% on the S&P 500. Decent day of gains yesterday. Really, really strong stuff. Every single industry group in positive territory. The S&P 500 with the biggest one-day pop going back to late June. Equities this morning firmer by 1/3% on the Nasdaq. Netflix skipping over a very, very low bar. We push ahead to the big tech names next week. In the bond market, quiet on a 2-year. On a 10-year, we closed Monday at about 317. On a 2-year, right now 318. On a 10-year, we closed Monday at 298. Right now 298. The curve's still inverted, but not much going on here with the Fed in a quiet period ahead of next week. A snoozy one maybe in the Treasury market is a welcome development, given what we've seen over the last several months. There is nothing sleepy about what's happening in Europe. Tom and I and Kaylee too have been talking about that repeatedly. Europe looks like this right now. Euro dollar 102.38, positive 0.1%. 4 days of dollar weakness going into the ECB tomorrow. Ursula von der Leyen just months ago of the EU Commission, Tom, stating what a lot of people are starting to think, that a full cut-off of Russian gas could become the most likely situation for many people, including her.
Yeah, I'm looking at Netherlands natural gas, and it's, you know, churn here off the peaks of early July, but it's up a little bit here. I don't want to make too much about it, John, but nevertheless, what we need to know is natural gas in Europe is exceptionally elevated versus in the United States.
A bit of good news out there. Prime Minister Draghi's holding on. Some good news for the Italian debt market. Lorcan Roach Kelly of Bloomberg coming out with the best line of this morning that Draghi is here to close spreads, and that's what's happening. The Italian 10-year down by 12 basis points. The German 10-year comes in by just 6. That spread between the two in at around 200 basis points. Tom, is that the comfortable level
the comfort level of the CCP as they're set to unveil some kind of tool that stops that from breaking out much wider than where we are.
We will stop now in the equity market and the day trading and the churning and such and talk about results. He is far too shy to talk about his results. They're out in little percentile analysis by Morgan Stanley. But the answer is the MSIF US Core portfolio is on the edge of act of God. Andrew Slemon joins us this morning to speak gospel. He's senior portfolio manager, managing director at the 93 and 99 percentile portfolio of the duration it matters. Andrew, your idea of short term is 3 years. For those that can't get out there, how do they get the courage to invest, forgetting about 1 week or 1 year action, and say, I want to invest for 3 years so I can get a 93 percentile like Andrew Slemon?
Well, I mean, look, from a market standpoint, when the market's down 20%, you look out 3 years, the returns are phenomenal. And I think that's what people are missing. When people say recession, no recession, I say, market's down 24%. We've built in a lot of bad news here. Right. And then from, getting to a high percentile, when the market's down 24%, you can't go buy defensive stocks. You have to start looking for good quality companies that are down more than that. And I just think there are a lot of companies down 40, 50, 60%. And that's embedded a lot of bad news into their stock prices.
Yeah. Nobody from Morgan Stanley's watching this morning, Andrew. Give me some names.
Well, I think the consumer discretion. I mean, look, University of Michigan consumer sentiment is at a 44-year low. You all have to think about which is the direction of change. And at that level, it's so bad that eventually it's going to improve. And I think gas prices coming down, optimism is going to improve. And when I think about where are stocks reflecting that very low sentiment, it's in the consumer area, home apparel, home furnishing, home retail, home builders. Those stocks have been crushed. And I think that's very, very attractive. And usually when I mention stocks like that, people tell me all the reasons why they're down already by that amount. And I think you just have to think things could get better from here. They priced in a lot of bad news.
So you have to think things could get better from here, but isn't the conversation we're having on the economic growth front that things are going to get worse, that we're going to slow as the Fed tightens?
It's like Bramlett.
No question. No question. Look, and at the market level, there's a battle going on. On the one hand, the bar was so low going into this earnings season. I mean, Tom Cayley, how many strategists have come on your show and said guidance is going to be lower? I mean, everyone expected a bad earnings season. So the setup was deliciously wonderful for, beating a low bar. That's the good news. The bad news is the Fed's not done raising rates. And I think we can't be too optimistic at the market level for that reason. But when you start to search for stocks, which is what I do, there are a lot of stocks down a lot more than the market. And I think there's a lot of quality stocks down a lot more than the market.
Well, Andrew, you talk about how everyone's expectation seems to be that guidance is going to be disappointing. It also seems that there's a lot of cohesion around the idea that the dollar is going to be a big theme as well this earnings season. We've already seen it, a warning from Microsoft. We saw it show up in IBM and J&J results yesterday. How large a headwind really is the dollar's strength that has faded over the last few days?
Yeah. So look, number one is there's really no evidence that when the dollar goes up a lot, it leads to weak stock market over time. There's really no evidence. In fact, if you look at the last time 10 times the market's up over the dollar's up over 10% in a year, the market's actually higher 3-6 months later. So there's no evidence of that. But and I think the reason for that is a lot of times the stock market says, well, it's the dollar, and the market looks through that dollar weakness because the dollar gyrates. It's incredibly difficult to call the market based on, where your perceptions of where the dollar is going. So I just wouldn't do that, other than the extent I think you have to think about going into earnings season, how weak have stocks been and how low is the bar? And right now the bar is really, really low. So I think what you're going to see is some of these companies are going to say, earnings aren't great because the dollar's too strong. And I question whether the stocks are going to go down on that because a lot of that's already embedded in their stock prices.
Do we need a catharsis? I mean, it's as simple as that. The Bear Crew saying we've got to get out VIX 40, catharsis, Andrew Slyman, ages, graze further, et cetera. Do we need that?
Yeah, I mean, that is a very good point, Tom, which is usually when you have these types of sell-offs, they end in some, cathartic event or some type of bad financial, I hate to say it, but somebody floats to the surface. And what's happening in cryptocurrency and some of these vendors, is that enough? It's hard to think that's the case. So again, I do go back to this. I'm just not sure. I think the market's in a kind of in a standing mode where on one hand, again, earnings are okay, but on the other hand, the Fed's tightening and usually that lows end in some cathartic event. Maybe that happens, early this fall. I still think the market will be substantially higher by year end, but I just think it's too soon to get too optimistic at the market level.
Andrew, I swear that you were definitively bearish the last time we caught up. Is something starting to change here for you?
Well, I think what's changed is that everyone thinks earnings are going to be horrible. I mean, the one side of the boat is so crowded. Guidance is earnings are expected to be so weak that I think that presents a very intriguing opportunity. And the other thing is I'm always very nervous. I mean, I've been on this show. I'm always nervous going into the summer. Bad things happen to the market in the summer. And I think, we're into earnings season. We're getting a lift out of earnings season, but the Fed's going to raise rates. And what's going to happen next month? It's all going to be about how many more times the Fed's raising rates. And that gets me nervous. Anytime the conversation pivots from individual stocks, which is what we're doing right now, to the market overall, I think the market becomes more vulnerable.
Usually people get nervous coming on this show because they don't know what Tom's going to ask them. Andrew, it could be anything. Andrew Sliman there, Morgan Stanley Investment Management. Andrew, thank you. Looking ahead to tech earnings next week. Apple on deck next Thursday. Not tomorrow, the week later. Jamie just sent this over, my producer, Tom. Morgan Stanley's Katie Huberty citing Mac service weakness, cutting to 180 from 185. That's a small cut. Bear in mind that right now we're at 151. But it's Wells Fargo too. They come down to 185 as well from 205. This from Wells Fargo. This came yesterday afternoon. Overall, we see a worsening COVID situation in China and beyond. A deteriorating macro environment, increasing FX impacts as the biggest risk to near-term estimates. Just a little bit of cautiousness being baked in slowly going into Apple numbers next week.
You have a producer?
I do. Do you not have one? I thought you had a team of producers, Tom.
No, I have interns. That's all I have.
Interns. So they're with you for the summer and then they go away.
Some of them don't even make it through the summer. They go, I got to go out to Nantucket. Goodbye.
Because you make them do a calculus course, maybe.
No, we do that. We have a calculus
Katie, did he actually do that?
Afternoon.
Yes, that is absolutely true. I have the book on my desk.
Did you read it?
I did.
You got to know dynamics,
You were joking how guests get nervous about what Tom's going to bring up on the show.
People read a calculus book before they stop it.
Yeah.
Stop it.
Yeah.
Stop it. You've got a friend. I would never do that to you.
You have a producer?
Katie's got a producer too.
Really? I don't.
Katie's got a team of producers, Tom. Futures right now down 0.2 to 1% on the S&P. We're down a little bit on the Nasdaq. Just a subtle move lower in the last couple of minutes. We're down by about 0.1% there. Getting some updates on the European energy front. Nord Stream 1 is set to come back online tomorrow. I say set to come back online tomorrow. Katie, we're not sure if it comes back online, how much gas comes through it, and the Europeans are getting ready for a tough winter.
Absolutely. Ursula von der Leyen saying actually it's the most likely scenario that the gas doesn't come back at all, which tees them up for a tough winter. They're saying the winter in 2023, 2024, without action now, could mean the gas crisis gets even worse. The European Commissioner for Energy right now saying the gas cutoff may cause 30 billion cubic meters of a supply gap this winter, John.
So 15% voluntary cut is being proposed.
Yeah.
Tom,
but
right
give me
now.
an intraday in euro right now. John, euro's given away just seconds ago.
101.90.
Yeah.
We're down about 1/3 So that's a turnaround, Tom, in the last couple of moments.
A little
that's
bit
for
of
sure.
a reversal. My non-producer, one of my interns got that for me.
They flagged that for you, Tom.
They did that.
We're down 6 basis points on a 10-year,
296.70.
Bit of a turnaround in this market in the last, I would say, 10 minutes or so. Down about 1/4% on the S&P. Bit of dollar weakness turns into dollar strength very quickly. Euro dollar 101.85. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. President Biden on Wednesday will announce executive action today to confront climate change. One provision would steer federal dollars to communities ravaged by heat. For now, though, the president is holding off on an emergency decree that would allow him to use sweeping powers against global warming. Former Secretary of State Henry Kissinger is warning President Biden against endless confrontation with China. The man who helped re-establish U.S. ties with China in the 70s spoke in an interview with Bloomberg News editor-in-chief John Micklethwait. Kissinger said that geopolitics today requires, quote, Nixonian flexibility to help diffuse conflicts between the U.S. and China. The House has passed a bill that would recognize same-sex marriage under federal law. It also would extend legal protections to all married couples. That's a reaction to concern that the Supreme Court might reconsider a ruling extending those rights. The legislation faces long odds in the Senate. And in the UK, the largest trade unions threatened to strike after the government offered below-inflation pay raises. The offers cover about 2.5 million doctors, teachers and other public sector workers. One union called it another kick in the teeth for the National Health Service. For the first time, Cathie Wood's ARK Investment Management has pulled the plug on an ETF. Wood is closing her ARK Transparency ETF, which launched at the end of last year. The fund gained only $12 million in assets since inception, a fraction of the $9 billion in Wood's flagship fund. It was a rare passive vehicle from ARK. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The 50 basis point increase will be among the choices on the table when we next meet. But it's not locked in.
It's not locked in. Andrew Bailey, the Bank of England governor, it's never locked in. Then all of a sudden, a newspaper article comes out 2 days before the decision and tells you what it's going to be before it comes out.
Does he have a fragmentation theory?
Maybe a little bit.
Are they arguing fragmentation?
I don't think they've got a fragmentation tool. Lucky him that he doesn't have to worry about that. Tom, futures down a third of 1%. I want to check in on the euro. Euro dollar negative 0.4%. We've got a turnaround here. 101.83. We had a little bit of euro strength, dollar weakness. That's flipped on its head in the last 20 minutes or so. We heard from the EU Commission President Ursula von der Leyen saying a full cut-off of Russian gas is the likely scenario. Essentially, Tom, Europe is preparing for a winter without Russian gas going into an ECB meeting tomorrow.
Certainly at the margin they are. You can go all doom and gloom in that, and the answer is we don't know if it's doom and gloom, but certainly at the margin, John. I would note, John, it's a very correlated move where equities were green. They're now red on the screen. The VIX actually goes a little bit gloomy, 24.67. So it's not just seen through euro as well.
I'm with you, Tom. Equities turn 2. Yields are a little bit lower by 5 basis points, 296.70. Tom, this is what you want politicians to be doing, preparing for the worst. You certainly don't want them to be surprised by a full cut-off of Russian gas later this winter. So we set the bar a whole lot lower, Tom, and we hope we don't have to deal with it, but it's becoming the most likely scenario for a lot more people.
And Ursula von der Leyen, of course, with her service to her Germany and the defense and the military side as well. Right now, and this is an immense joy with her Bank of England experience, Jennifer McEwen is with us out of UCL. She's with Capital Economics, a fabulous shop here that looks at global economics. I want to go local with you, Jennifer, on 9.4% inflation. Is the character of inflation in a given country, the United Kingdom, the same as double-digit inflation in Spain or 8-ish, 9-ish inflation in the United States? Is it all the same, or is each nation different?
I mean, I think there's clearly very similar forces that are driving inflation up and very similar implications in terms of the reduction in people's real spending power and the difficulties that households are having now. It's clearly weighing on spending both here in the UK and elsewhere. And I think what's worrying in these latest data is it seems that signs of domestic price pressures coming from the service sector, for example, are picking up.
Well, it's broadening out is what I'm seeing here now. Is Capital Economics looking at central banks always focused on some form of inflation-adjusted core measure, or are they looking at top-line inflation as they study this through the summer?
Yeah, well, it's a whole variety of indicators. What central banks are most worried about is core underlying inflation, given that that's the persistent part. But what they'll be looking for is signs that the rise in headline inflation, the rise in energy prices, food prices, is feeding through to that more underlying price pressure. And we are really seeing that now. There's been a pickup in wage growth across a range of economies, and also in services sector inflation and other measures of core inflation, which is really worrying for the likely persistence of price pressures going forwards.
Well, and that's clearly going to be worrying for Andrew Bailey and the Bank of England. How far can they take it, Jennifer, to get that inflation under control when you also have a deteriorating growth outlook coupled with it?
Yeah, well, it's a really difficult situation for the Bank of England and the ECB too, in terms of weighing the rise in price pressures, which is very clear in both economies, against the risk of recession. And in fact, in the UK's case, we think that the economy probably will fall into a technical recession. But at the same time, we think the Bank of England is going to be forced to go on raising interest rates, and we think it will reach a peak of 3% next year.
What about the ECB?
The ECB, we think the peak will be more like 2%. The neutral rate of interest in the Eurozone.
They can get there,
is
Jennifer?
lower.
I'm sorry, but while we're talking about a recession in Europe and the potential cutoff entirely of Russian gas, do you think the ECB can not just exit negative rates, but get to 2%?
Yeah, I think so. It will take a lot longer than it will take for the Fed. And obviously, it's going to depend a lot on underlying conditions. What we're seeing at the moment in the Eurozone is a definite pickup in underlying price pressures. In Germany, in particular, recent wage negotiations suggest that wage growth is picking up. So this rise in inflation risks becoming sustained. And the ECB needs to be focused on it, on that. That's its target. Again, in the Eurozone's case, we think that it will dip into a mild recession, partly related to the limits on gas supply and uncertainty around that. But nonetheless, I think the ECB is going to have to press ahead.
And now, Jennifer, we pause for a moment of silence. We're calling this Jennifer Snooze Fest Wednesday as we go into what is arguably the most important ECB meeting tomorrow. What will you listen for from Christine Lagarde and Philip Lane?
Well, obviously the first point is going to be whether it opts for 25 or 50. That will be a pretty clear signal of where it stands at the moment and what's likely to come going forwards. We think it's more likely to opt for 25, given that it's pretty clearly signalled in the past that that's where it would go. But then some indication of whether it's going to pick up the pace going forward, some confirmation of that. It's already suggested that it will pick up the pace. And we're penciling in a 25 this time, but then a couple of 50s. In the rest of the year.
Jennifer, a question off the mark. You were at UCL. Wendy Carlin is one of the giants of economics. Her mathematics, her algebra is just first rate. Does the algebra in Wendy Carlin's textbooks still work, or are we in such an unusual territory that the textbooks don't work anymore?
Yeah. Do you mean with regards to the labour market? And
labor market, I'll let you take it where you want. I just don't, I really question whether the math works anymore.
Yeah, well, it's really, really difficult to model this situation. That so much has changed, and there are so many temporary factors at play. Not only concerns around gas supply, but also the pandemic, which we're still recovering from. It's very, very difficult to tell at the moment where kind of normal or neutral rates of growth are, what kind of rate of interest might be restrictive, what kind of rates are still very accommodative. So central banks are going to need to watch economies very, very closely, I think, to judge what effects their policy tightening is having on the economy and therefore respond to that. And that's why there's so much uncertainty really at the moment. If it's very clear that interest rate hikes are for example, hitting housing markets very hard, as they may do in some economies, then it may be that central banks can't go quite as far as we're all expecting them to now.
Jennifer McKeown there of Capital Economics. Jennifer, thank you. With a big call on the ECB, can they get to 2% given what's going on right now? I was just working my way through this statement that's just come out, this press release from the European Commission. Safe gas for a safe winter. If you're just tuning in, here's the proposal. A new tool and a European gas demand reduction plan to reduce gas use in Europe by 15% until next spring. Of course, this is a proposal, but ultimately the conclusion for people in the Commission right now is the most likely scenario is a full cut-off of Russian gas. We'll see if that's the case. Nord Stream 1 is set to come back online tomorrow. When a lot of this information dropped, it confirmed what we'd reported yesterday afternoon, Tom, here at Bloomberg, but ultimately the market started to turn. Euro-dollar negative a third of 1%, 101.91.
Yeah, and again, all will wait for Mr. Putin because it's tied directly into sanction of parts.
Equities down 0.2% on the S&P 500. Netflix skipping a low bar. That stock is doing okay in early trading. From New York, this is Bloomberg.
The issue going forward now is how much is the economy going to slow? How much is nominal GDP going to slow? And what does that mean for earnings?
The most likely scenario remains that the economy is going to navigate through without going into recession.
We are going through the different cycles and parts of a bear market, but this is a process that still has further to play out.
We do not expect that the Fed is going to really dramatically reverse course and cut rates.
The ECB now has to do the best that it can, which means hike rates.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio. Alongside Tom Keene, I'm Jonathan Ferro, together with Katie Lyons. Bramo out of the building. She'll be back on Monday. Futures, negative a tenth of 1%. This market's turned around in the last 30 minutes or so. Tom, the headline, Europe preparing for a winter without Russian gas.
For those waking up in America, Ursula von der Leyen in Brussels, always important, but never more so now. And there's nuances here, John. Frankly, you know them better than me. What I know is I got a correlated move on the screen of a screen that changed about 40 minutes ago.
They're proposing something that we reported yesterday, a 15% cut in gas consumption on the supply concern, Tom, and it's quickly become the base case for the European Commission. Maybe this is the prudent response for policymakers to prepare for the worst. They're saying the full cut-off of Russian gas is the most likely scenario. And Tom, this goes into an ECB meeting tomorrow. We've said this repeatedly through this week so far over the last month. What a tough call they've got to make at that central bank.
Well, and it's not a call, it's calls plural. John, the interstate mumbo jumbo there, I don't really pay attention to, and I know 50 beeps is in play. Is it really in play, John?
They say it's in play, according to our reporting,
okay,
Tom.
So, we're going to have it come out tomorrow, but all I want to know is Germany and Spain on the same page? Is Germany in a fractured Italy? Our Francine Lacroix reporting from there this morning. Are they on the same page? I don't think they are, John.
That's the only good news out there this morning, Tom. The Italian 10-year debt is rallying.
Francine's getting a decent lunch and we're not?
Good for Francine too.
Yeah,
Yields are lower by 11 basis points on an Italian 10-year to 321. The spread between Italy and Germany right now in at around 200 basis points. Kaylee, Prime Minister Mario Draghi is holding on to that title. Prime Minister, just about.
Yeah, and what'd you say earlier? Maybe it's Draghi's job to monitor spreads.
Lorcan
Roche
Kelly said
Lagarde's.
It has been his job so far this week, that's for sure.
Well, and it's a job he is doing. The question is he going to continue the job of Prime Minister past today? Because he said he does think that the coalition can rebuild. The question is, will it rebuild? I believe there's a confidence vote at 1 p.m., so it'll be interesting to see how that develops. But whatever happens politically in Italy, the ECB has no control over, and yet that's something that they're going to have to consider when they're making these policy decisions.
You'd have to think this is a factor in earnings, wouldn't you? You and I have discussed it a few times right now. Weaker European economy, one. And then two, you've got this FX story. It's not going anywhere.
It's a double whammy for these multinational companies because on the one hand, you have slowing growth in Europe, which could hit demand, therefore revenue is lower. And then whatever the revenue figure is, you get hit with the FX headwinds coming down the other way, which is why we've seen warnings from the likes of IBM, which reported yesterday, guidance missing because of the dollar. Microsoft has warned about it. We'll look for clues next week. But I have a feeling that's going to be one of the most common themes as we get deeper into this earnings season.
Pushing ahead to big tech next week. Netflix this morning up by more than 6%. We were looking for a 2 million subscriber loss. We got a 1 million subscriber loss. That gives you an idea of how low the bar was and that Netflix just about skipped over it. Futures right now down a little more than a tenth of 1%. I'll whip through the price action for you. On the NASDAQ, we are dead flat now, unchanged almost at negative 0.04%. Yield still coming in, 5 basis points, 296.89 on a 10-year. There's your euro move. It's subtle, but it's there. We're down a third of 1%. A weaker euro, 101.91. And Katie, just briefly, crude down a little more than 1% at 85.
Yep, still at triple digits, though. Obviously, way lower than we've seen of the highs of the year, but still we're north of $100 a barrel on oil. Now, of course, that is one portion of cost going higher, but also the cost to buy a home is higher now that mortgage rates have risen with the Federal Reserve hiking those interest rates. So how much is that reflecting in existing home sales? We will get that data at 10 a.m. Eastern time following disappointments on both home builder sentiment and building permits yesterday, which fell about 2% month on month, really speaks to a cooling in the once really hot housing market as the Fed looks to tighten things in this economy. Then at 11 a.m. Eastern time over in the UK, we will get the final Tory ballot announced. Basically, who is going to be up against Rishi Sunak in the battle to be the next party leader and prime minister. Right now, it looks like Liz Truss actually is gaining momentum, may out overdue Penny Mordaunt. But of course, there are implications to the UK economy, considering Liz Truss would like to cut taxes. Then finally, after the bell, talking of a low bar going into earnings, Tesla will be reporting, and it's down 30% year to date. A lot of headwinds this company is facing on the supply side, specifically China, which has hampered production at its Shanghai factory. So what does the outlook look like in the second half, considering the COVID zero policy in China, John, isn't necessarily going anywhere?
No, it's lockdown on, lockdown off, and then you've got this lone boycott as well that we need to stay on top of too in China. Katie, thank you. Joining us now is Jim Bianco, president of Bianco Research. Jim, you know the recent theme, don't even know if it's recent, it's been going on for months, fade the inflation story. Fade the inflation story. Jim, are you pushing back against that?
Yeah, I am. This year's people that are calling for inflation peaked are last year's people that called inflation transitory. And it goes to a broader theme in the market that there's a very difficult understanding of what inflation is. Look, the chairman was right. We understand now what little we understand about inflation, and the same thing applies to Wall Street. And the story continues that inflation is a problem, and it's going to stay a problem. And those that think it might have peaked at 9.1, I am kind of on the fence on that. But more to the point, it isn't going to come down fast anytime soon. And the Fed's going to have no choice but to stay aggressive. And the last thing is, I still think that all the talk about whether we're in a recession, and I happen to think we are, is of secondary importance. What's of primary importance is inflation. If it doesn't come down, the Fed's not going to stop. And in a recession, I don't think it's going to stop them.
Jim Bianco, your beloved Cubs are going back to the 1970s and their level of mediocrity through the baseball season. In the 70s, we were all nominal. You allude in your research note to the idea of nominal inflation analysis, nominal GDP analysis, the nominal analysis of corporate revenues in a new inflation world. Discuss that.
Yeah, so a lot of people talking about whether or not we're having a recession are asking the question, well, if we created 370,000 jobs, how can we have a recession? If we've got a bunch of positive economic reports, how can we have a recession? The answer is not whether or not it's positive or negative. Is it faster than the inflation rate? And the answer for a lot of this is no, it's not. And that's why the first quarter GDP was negative. And that's why you're hearing more and more calls, including the Atlanta Fed GDP, for the second quarter GDP to be negative. Yes, on a nominal basis, it will have expanded. It just won't beat the inflation rate. And that gives you negative real growth. And that is the very definition of a recession.
Well, as we talk about, you think the U.S. economy already in a recession. You don't think it'll stop the Federal Reserve in its fight against inflation. Where is that going to put Fed funds when? Because you had Blackstone out overnight saying we're getting to 5% next year, potentially.
Yeah, every Fed rate hike cycle has ended, every one of them back to 1950s, with positive real yields. In other words, interest rates above the inflation rate. Now, that doesn't mean we have to go to 9% on the funds rate. The inflation rate will come down, but we have to see the funds rate go above the inflation rate. Now, take Wall Street. Wall Street's most optimistic scenario is that the PCE rate, which is about 0.5% lower than CPI, will hit 4% by the end of next year. Well, that's going to put the funds rate over 4, maybe near 5. So I think people have to realize that rates have to go a lot higher. Now, the only thing that changes that is if we have a bad recession, and that kills demand and that brings down prices quite a bit, but then we have a bad recession at that point. So I don't see the idea of a September pause or the Fed is done after July as being in play right now unless something dramatically turns south in the economy.
Jim, I'll give you a final word. The ECB tomorrow. What are you looking for from President Lagarde?
President Lagarde, finally getting off the snide and hiking rates. I suspect that they're going to be like the ECB, and they're going to go 25, and they're going to be very considered and very slow moving. And all the talk about 50 is, while I think they should do it, they won't. They'll move very slow.
President Lagarde. Do you like that, Tom? That's a new one. President Lagarde. There we go. Jim Bianco of Bianco Research. Thank you, Jim. It's good to catch up.
Thank you.
President Lagarde, John, is just ex post.
Sure.
And maybe they're more ex posty than other central banks. Can you imagine the politics, John, over this fragmentation debate?
The problems are piling up. I think that alone, Tom, if that was the only thing they had to focus on tomorrow, that decision would be tough enough.
Fortunately, we don't have enough time here for me to get into trouble. But, John, economics is basically physics envy. And, there's like Kaylee's been busting my chops about calculus, and there's a whole Newtonian calculus plug and chug. Jean-Claude Trichet is actually very wonderful at this. I look at the fragmentation debate almost as a thermodynamic experiment, and it doesn't work. You got to have a study of what will be the constraints if they succeed at fragmentation. And the only constraint I can come up with, John, is less growth, less, as Ned Phelps would say, dynamism. I don't understand how fragmentation is anything but almost a physics effort over to weaker European growth.
Tom, you've got to make a political call as well. You've got to work out the next move of the Russian president.
They do okay there?
And gas supply did great.
Yeah.
I think you lost many of us.
Yeah, we had a dog that died a couple years ago. We named him Entropy.
I've got no idea if that's true or not, based on the names of your current dogs.
Well,
I know. This from Neil Dutter of Renaissance Macro. Home purchase demand remains under pressure. For the weekend of July 15th, mortgage loan applications for purchase sank 7.3%, the third consecutive weekly decline and the lowest level since April 2020. Not good news for new home sales over the summer.
Yeah, John, it's real simple. I made a custom function yesterday of starts versus multifamily, home starts versus multifamily. It is a wow trend. This nation is moving to a renter nation.
You'll love this line, Tom. I've got to share this with you. It's from a Bloomberg subscriber. His mouth says physics. His suit says strawberry jam salesman.
Actually, Smucker's is a very good company.
That's kidding me. That is gold. Futures down 0.2%. Thank you for that.
Do you call it marmalade?
Keep sending them in.
In England, do you call it? You're the damn Marmite. Do you actually eat marmalade?
I don't eat Marmite. I'll eat marmalade though. I'll eat marmalade. We're done here.
Good morning in Ohio.
Good morning.
Smucker's the best.
This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. In the UK, Conservative MPs will decide today which two candidates will face off in the battle to replace Prime Minister Boris Johnson. On Monday, former Chancellor of the Exchequer Rishi Sunak topped the fourth ballot of Tory lawmakers. He was just two votes short of the threshold that would guarantee him a spot. Foreign Secretary Liz Truss is now the favourite to join Sunak. She's been closing the gap solely on Trade Minister Penny Mordaunt. In Italy, Prime Minister Mario Draghi has told the Senate that his coalition can be rebuilt. That's easing some concerns that Draghi will quit the government and throw the country into chaos. Markets rallied after his comments. Last week, Draghi said he wanted to resign because he didn't have the backing of all the parties in his coalition. Vladimir Putin has signaled that Europe will start getting gas again through a key pipeline, but the Russian leader has some conditions. He says that unless a dispute over sanctioned parts is resolved, gas flows will be tightly curbed. Europe has been waiting to see whether gas resumes flowing on Thursday, when maintenance on the Nord Stream pipeline is set to end. And economists at Citigroup have labelled the global recession a clear and present danger. They say there is a 50% chance of a slump. In a report to clients, Citi economists said they now expect the world economy to grow 2.9% this year and 2.6% in 2023. That is slightly lower than previously. In a win for Twitter in the legal fight against Elon Musk, a judge in Delaware agreed to fast-track the company's suit to make Musk complete his $44 billion buyout. The trial's now set for October. Lawyers for Twitter say they'll need only 4 days to prove that Musk must honour his commitment. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
To make it through the winter, assuming there is a full disruption of Russian gas, We need to save gas to fill our gas storages faster. And to do so, we have to reduce our gas consumption. I know this is a big ask for the whole of the European Union, but it is necessary to protect us.
Just moments ago, Ursula von der Leyen, the European Commission President, preparing Europe for a winter without Russian gas. From New York City this morning, good morning with Tom Keene and Katie Lyons. I'm Jonathan Ferro. Bramo back with us at some point next week. Futures negative 0.2% on the S&P, on the Nasdaq 100 down a little more than 0.1%. Bit defensive out there at the moment. Yields in 6 basis points lower to 296.33. There's the euro weakness. We were showing just a little bit of euro strength. Euro dollar down by 0.2%. Negative 0.2% now. Euro dollar, Tom, 102.08.
John, thanks so much. Futures at negative 9 right now. Lowell George and Linda Ronstadt may talk about Tehachapi and Tonopah, and they may be willing to look at global climate change as it is played in the southwest of the United States. The distance from Lake Powell to Lake Mead is nothing but grim, some 290 miles. They're living it in the southwest. They're talking about it in Washington. Anne-Marie Horton joins us now on our new climate change frenzy. Anne-Marie, it is so new in Washington. It is so today. It is so this morning. I guess the president's going to say something about it. People out in the Southwest are going, are you kidding? Tell us the character and quality of the jawboning today on climate change.
Yeah, he's going to be talking about it in the Northeast, actually, Tom, in Somerset, Massachusetts, at an old coal-fired power plant. Used to be one of the biggest in the Northeast, and it's now a hub for some of these cables that are going to be needed for more than dozens of wind farms in the Northeast. And the president is going to say climate change is an existential threat. He's going to talk about some executive action, directing some funds to some of these communities that are hard hit by climate change, but he's going to stop at an emergency decree. And this is right now what the White House is weighing, whether or not they should go as far as an emergency decree. But if you look at the New York Times today, one of their main stories is a heat index. 80 million Americans, about 28% in contiguous United States, is living in heat levels that are not normal. This is a moment he can speak to, whether or not it's the United States, whether it's southern France, what's happening in Athens. There is obviously a moment he could speak to that may resonate with the electorate.
Anne-Marie, you look cool, calm, and collected after Jeddah. I mean, everything is relative. What I would suggest, Anne-Marie, is everybody's going to trot out the same old on climate change. And what it comes down to for conservatives is the arch fear that climate change will diminish growth. What's the pushback from the White House?
Well, the president will talk about the fact that climate change does the opposite in his sense, or fighting climate change, I should say, because it is an avenue for new jobs. And for the most part, a lot of renewable jobs are very much so higher paid jobs. So the president will use that as a way that this is not going to be hindering in growth. But when you look back or you think about them potentially weighing this emergency decree, they are really going to be walking a tightrope. The president is coming out and talking about this because of what happened last week, which is Senator Manchin saying that the climate provisions and the tax hikes are dead on arrival. But they still need his support in a 50-50 Senate when they're discussing other legislation like health care. So potentially, if they were to go to a decree, an emergency decree, which would really give the president really broad powers. We're talking about when there's a hurricane, a terrorist attack, things that we do not experience every day or in decades sometimes. Those kind of powers we're talking about, they may ostracize Senator Manchin. So it's a difficult line for them, but today he's going to try to make sure that his party knows something that he voted on, he ran on during the campaign, that he's still committed to.
Well, let's talk about the issue's importance for voters then. I just pulled up some Pew Research survey of the American people on what the biggest problem facing the country is. Climate change comes in at number 6. Then you have the deficit, gun violence, violent crime, the affordability of health care, which you were just speaking to. Inflation, far and away the number 1. 70% of people responded with that answer. So, Anne-Marie, does really any action the Biden administration needs to take between now and November have to address inflation in some shape or form?
Well, I'm sure they will spin today's climate change action as bringing down the cost of energy in the future and also not having to rely on a global marketplace if they have renewables at home via solar or wind, that what we're seeing, say, in the oil or natural gas market. The other thing with Kaylee, as you're saying, bringing down inflation and wanting to bring down the price of gasoline, although right now it is a national average below $4.50, If they were to go ahead with this emergency decree, what kind of message would that send to the same producers in Texas that they are at the moment are trying to beg to produce more once that SPR runs out?
Anne-Marie, what do you make of that? What will they say?
Today, they're going to talk about the executive actions they could take. I think this is why they are still weighing this emergency decree, and they don't want to touch it just yet, because they need the help of every oil and gas producer in the United States, especially going into the winter. We already see what's happening in Europe this morning, telling consumers and industry to cut by 15% their natural gas consumption. They are trying to make sure they have enough oil and natural gas, and we do in the United States, but they want to make sure they can bring those prices down. If inflation and gasoline is your number one concern, you cannot ostracize the industry.
AMH, good to catch up outside the White House. Tom, build a refinery at the same time. We don't want to see that refinery in a few years' time. Are you there?
I'm there, John. It's the same argument. CNN has a great chart, John, in the last couple of days showing the water level of Lake Mead. And you don't need a rocket science degree to know it is absolutely grim what's going on. And, you know, there's some optimism, I guess, on some of the conservation efforts that are being made. But between the Colorado River and up to Utah and up to Wyoming, I mean, this is absolutely critical. I mean, there's no other way to put it. We're at a new place is how I'd put it.
This administration in a new place as well, Tom. Gas prices have been coming in every single day since the middle of June, going by the average daily gas price. That was what AMH was talking about. Sub 450, Tom, on gasoline.
Yeah, Greg Valliere writes this morning. He's going to join us here, and you know they need to get back to $3 for the Democrats to take a victory lap. Yeah, I get that that's the item of the moment, and of course in the heat of summer it is important. There's a lot of suffering going on. You don't need to know that, John, over what you see in the United Kingdom, but I would suggest that the climate change debate has shifted, and for conservatives, it's about conservative Arizona, conservative New Mexico, conservative Southwest, all the way over to San Diego. They're running out of water.
Well, Tom, I'll tell you what, in Europe, we're reconsidering what's green and wondering whether nuclear is going to be a bigger part of that picture, given what's happening with Russia.
Yeah, well, again, that's green, and look at the coal chart. I would just look at the price of coal, talk about a reversal.
Big reversal. Futures negative 0.1% on the S&P. On the Nasdaq 100, we are unchanged. Your euro slightly negative, negative 0.25%. Euro dollar 102.03. A big 24 hours for Europe. Coming right up.
Biggest day of gains on the S&P 500 behind us since June 24th, coming into this morning. And good morning to you. We're negative about 0.1% on the S&P. On the Nasdaq 100, unchanged on the Nasdaq 100. Bit of a turnaround in the last hour or so. Bit more defensive. You see that in the bond market. Let's take a picture, a snapshot of that for you. 2s, 10s and 30s. Your 10-year comes back in 6 basis points, 296.52. On a 2-year, we trim some of that move higher. We're lower by 6 basis points or so to about 317. We've basically been hanging out at these levels all week. The Fed quiet period may be helping things out just a little bit. None of that volatility from speech to speech going into the Fed meeting next week. Tons of volatility in Europe we can talk about. So let's take a picture of things right now. Euro dollar, and then we can compare a German 10-year to an Italian 10-year. And there are 3 things to look at. Point 1, Italian politics. It looks like Prime Minister Mario Draghi may hold on. He signalled he's willing to. There's a lot of work still to be done. That compresses spreads just a little bit. You see that with the Italian 10-year down 10 or 11 basis points. The spread between a German 10-year and Italian 10-year just about inside 200 basis points earlier on today, in and around 200 basis points or so right now. That's Italian politics. Then we need to talk about the ECB, the prospect of a 50 basis point hike, and of course that new bond buying tool. What does that look like? Well, we actually see the details of that tomorrow. That's point 2. Here's point 3. Tom, Russian gas. Europe is preparing for a winter without any. Point 1. Point 2 on this story over Russian energy is Vladimir Putin has signalled that Nord Stream 1 could come back online, though, as TK, you know, this comes with conditions. Will we settle that spat over sanctioned parts and how much gas can actually run through that pipeline?
Yeah, what I do is I go to the Bloomberg and I look at Rotterdam coal, which has pulled back over the last 5-6 days, with 3 days here, John, of a little bit of a leg up, not near February 24th and that explosion, but buttressed right up against a winter of agony.
So if you're trading the euro side of things, Tom, you're trading those three things right now: Italian politics, the ECB, and Vladimir Putin's next big call. And that's before you even factor in the dollar story.
What if she comes out tomorrow? I mean, today's a snooze fest. At 8:45 tomorrow, she comes out and says, we don't have a fragmentation plan.
Then I think we've got a problem.
Yeah.
I would suggest we would have a problem if they don't have a plan. Is their willingness to come up with a plan enough to cap things? Perhaps for now, that seems to be the story. But at some point, the market starts to call your bluff, Tom. Euro dollar just sub 102 at 101.99. We're negative about 1/3%. That's the cross-asset price action. We can get you some single names and say good morning to Kaylee Lyons. Hey, Kaylee.
Hey, John. Well, Netflix is one of the big stories of the morning. We were expecting they could lose 2 million subscribers in the second quarter. The good news is they only lost a little less than 1 million. So, yes, still a loss, but it wasn't as bad as was expected. And when the stock was down near 70% year to date before the print, you are seeing some relief coming into the shares this morning, up about 6% before the bell. You had other earnings movers as well this morning. Biogen lifting its full year earnings outlook earlier. However, there was a bit of a disappointment in the pipeline, which may be why the stock is down 2.4%. You also have Baker Hughes lower. It missed expectations, a large part of that due to the suspension of business in Russia. It also said that the oil demand outlook for the next 12 to 18 months is deteriorating, which I think is really interesting. That stock down about 4%. Of course, we're awaiting more earnings today. After the bell, Tesla will be reporting. This is a stock down 30% year to date, facing a lot of headwinds from China in particular. So we'll look for clarity on that. The share's up about 1% ahead of those results. But speaking of China and specifically the COVID-0 policy, due to an outbreak in Macau, casinos have been shut. They look like they're going to reopen on Saturday, July 23rd. So that's giving a lift to some of those casino operators with big business in Macau. Wynn Resorts, Las Vegas Sands, each up in the ballpark of 1.5% to 2%. Tom?
Kaylee, thanks so much. Okay, what we're going to do here, folks, is we're going to get away from the vanilla, stocks up, stocks down, price, yield, you know, the usual surveillance chit-chat, and actually go inside baseball on what pros are talking about in the debt market between a yield that's a yield and a yield that floats. It's called the floating rate market, where the piece of paper adjusts in yield over time. Expert on this is Deborah Cunningham, Global Liquidity Markets, CIO at Federated. When she goes swimming, she doesn't use floaties, but she studies the floaties as well. Deborah, I see an immense focus now on floating rate paper. How big could the losses be? Floating rate floats up, price down.
You know, with floating rate securities, it's the beauty of the instrument in a rising rate environment is that it protects pricing as well. So as interest rates go up, generally with a fixed rate security, your price goes down because it's not worth as much. It's not earning as much. With a floating rate security, however, that interest rate adjustment assists in maintaining the pricing value of the bond. So it's likely to be something that works well in a rising rate environment.
But then, like convertible bonds, when it gets into an optimal scenario, as perhaps we're in right now, do they get priced up where they're not attractive just because of demand?
They absolutely do. And I can tell you, my team every single day tries, wrestles with the question, when to extend and when to switch from fixed to floating. It's a timing situation in the marketplace. We don't think we're quite at that time frame yet. However, we've done little chunks of that conversion, as short-term interest rates have continued to go up over the course of the last month. Not putting big bets on anything, but making some small reversals that we think would help and extend the higher interest rates for a longer period of time with the fixed rate securities that we've kind of layered in on top of what's still predominantly floating rate securities in what we think will continue to be, at least for the next 9 months or so, an interest rate increasing environment.
Deborah, we saw a ton of that at the turn of the year. People just flying in, powering into leveraged loans. Seemingly the worry was higher rates and not credit quality. Deborah, has that changed in the last few months?
It hasn't changed a whole lot. In fact, this earnings season, I think, convinces people even more that credit is not challenging right now. Certainly the largest component of credit within the market, generally the financial sector, is, at a peak from a credit metric standpoint. Capital's high, reserves are high, losses are low, non-performers are low. Now that will change. We'll get to a point where, there's a peak and we start to go down the other side of the credit curve. But for the most part, we haven't reached there yet. Even manufacturing firms, autos, various types of building supplies, different types of energy companies, they continue to be very high from a credit metric scoring standpoint.
Yeah, I hear from so many people that things aren't going to get messy enough in credit that it causes the Fed to blink in any way. And while we're talking about the Fed, Deborah, we focus so much on rate hikes, how large they will be, how long they will be large, all of that. We don't talk as much about the fact that quantitative tightening is now underway. You say the impact of that so far has been negligible. Is it about to become less negligible?
It may be. I think it will be welcome in the context of increased Treasury securities coming back online, if you will. We have had a supply-demand imbalance in the Treasury marketplace with, those wanting less risk, seeking, higher proportions of Treasury securities. At the same time, supply has not been increasing. When we see Treasury securities from a QT perspective start to make an impact and build up that supply again, I think that will be healthy. On the MBS side, it may not be too bad of a problem there either as MBS securities come back online, just simply because they can be used as collateral within repo transactions. And right now, when you look at the Fed's reverse repo facility, it's at an all-time high, continuing to be, making records on a monthly basis. And as such, if there is additional mortgage-backed supply in the general markets, maybe the banks and broker-dealers as traditional counterparts come back online with that. So I don't think it's a huge issue, even as the Fed ramps up that QT problem.
And just one final question on Fed guidance, Deborah. Can we still trust it?
Well, we were a little bit surprised last month during a blackout time period when, all of a sudden we went from 50 to 75 basis points because of a mysterious media leak, through the Wall Street Journal. I think just this past Monday, 2 days ago, there was considered to be maybe another mysterious leak. And I think that's people just now having their antennas up because of this, one-time event that occurred.
Deborah, John Ferro aged over those mysterious leaks. I think we saw the first gray hairs. I think.
I think there are lots in the industry that did as well. It was a surprise. And I think if the Fed wants to regain confidence, they either need to, use that as a tool more often and make it legitimate in the minds of those that are, traditional Fed speak watchers, or back away from it and maintain that,
there you go, John,
that correct blackout time period.
Deborah Cunningham, thank you. Of Federated Hermes. Deborah, thank you so much. Tom, it's now the ECB doing it, apparently, as well. Look, the guidance doesn't work if this is what you want to do. Let's put it that way, to Kaylee's point. Just quit doing the guidance. Quit doing the forward guidance. What's the point in it?
John,
if you're just going to make the call 2 days out in a newspaper article.
You look over the span of a Bloomberg career and you look at important dinners, and I had a forgettable dinner. The food was terrible, with Richard Berner, the giant of Morgan Stanley and all his good work as public service to the nation. And Berner was absolutely scathing on the over-communication and how it harms the anchoring of central bank confidence.
Tom, this is the post-financial crisis communication framework. We talked about it earlier this week. It's broken down.
Should we go back to Greenspan?
It had a purpose, Tom, in the low inflation era. It was about convincing people rates are going to stay low for a long, long time. This time around, I would argue, and I think most people would too, it slowed them down. It slowed them down, Tom, in a massive way as they look to respond to something moving a whole lot quicker.
Yeah, I just think it's over-communication. I mean, you know where I am on the dots.
We're on the same page.
I'm just trying to talk myself out of the Fed special, July 27th.
Should we have a limit on Fed president speeches, Tom?
I don't know. Should we do an ECB special tomorrow? John, you and me in Frankfurt. We can leave. Kaylee can do the 9.
You want to leave this
simulcast. You and I, we don't need to pack our bags and ready to go because we'll lose the luggage anyways. Just go.
You ping a message to Al from New Jersey.
No, I just think Kaylee can do the 9 simulcast. Do it with Paul Sweeney. We'll get dashed to the airport.
The 9 tomorrow's a 15-minute show because of the news conference.
We can buy a
Kelly will take that one.
Toothbrush in Frankfurt. I think it makes sense.
You're selling it, Tom. We're down 0.2% on the S&P. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. The House has passed a bill that would recognise same-sex marriage under federal law. It also would extend legal protections to all married couples. That's a reaction to concern that the Supreme Court might reconsider a ruling extending those rights. The legislation faces long odds in the Senate. President Biden will announce executive action today to confront climate change. One provision would steer federal dollars to communities ravaged by heat. For now, though, the president is holding off on an emergency decree that would allow him to use sweeping powers against global warming. Former Secretary of State Henry Kissinger is warning President Biden against endless confrontation with China. The man who helped re-establish U.S. ties with the nation in the 70s spoke in an interview with Bloomberg News' editor-in-chief John Micklethwaite. Kissinger said that geopolitics today requires, quote, Nixonian flexibility to help diffuse conflicts between the U.S. and China. Tesla reports earnings after the closing bell today, and the electric car maker's run of rising sales and profit is under pressure. During the second quarter, Tesla faced challenges including supply chain difficulties and lockdowns in China that hurt its ability to make cars. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is a market defined by underinvestment. We just haven't been investing enough. Right now, even above $100, there isn't really an incentive to increase investment. And I think that's why we remain structurally bullish this space.
And Rita Sen there, the chief oil analyst at Energy Aspects on the crude market right now. Crude right now, just a little softer, 102.48 on WTI. From New York City this morning, good morning. Futures negative 0.2% on the S&P. On the Nasdaq 100, we're down about 0.1%. Euro weaker, decidedly weaker in the last couple of hours. We're negative 0.4% there. Euro dollar 101.90. The European Commission preparing for life without Russian gas this winter. The Russian president, Tom, signalled that they could get some gas through Nord Stream 1 when it comes back online, but there are some big conditions attached to that.
Big conditions and also real ignorance about engineering. We're going to solve that right now. Will Kennedy joins us, Senior Executive Editor for Energy and Commodities at Bloomberg. And when Will Kennedy and Stuart Wallace built our industry of hydrocarbons at Bloomberg, which I won't mince words, is world best, world class, he said, we've also got to understand how this stuff actually works. Will Kennedy, I think the vast majority of people looking at gas flows, Nord Stream, and tossing around all these phrases, their knowledge base starts with the thing they hold in their hand at the gas station when they put gas in the car. Let's talk about what actually these parts are. The gas flows at an unthinkable high speed, and that has to be forced by, what, ginormous turbines? I mean, it's almost science fiction, isn't it?
That's exactly right. You've got these pipelines that stretch all the way from Siberia, Tom, through Russia. Nord Stream 1, which is the one we discussed, line goes under the Baltic Sea into northern Germany and into the European gas pipeline network. Now, when you pump natural gas, you have to pump it. And what you get are these big turbine stations where it compresses the gas and forces it through the pipeline. Those turbines would look very much like enormous jet engines, similar to what you see on a Boeing or an Airbus, but a much greater scale, and they're very complicated, very highly engineered pieces of kit. And what we're talking about now, the games are being played about repairing, maintaining these turbines, and they've gone to Canada and gone back, and that's what Putin's been discussing this morning.
I mean, Will, we're making jokes about WD-40. You don't even know what WD-40 is. It's an American spray silicone thing that helps you get the
We have
the swing.
that, Tom.
Oh, you have that.
We
It
have
gets
that,
a
yeah.
swing set going on the backyard. You can use it to lighten up the Marmite in the morning. And Will, I look at the engineering involved here, and the answer is it's about sanctions of highly sophisticated stuff. Who makes a decision that whether it's GE or Siemens or whoever, that we unload those turbines over to Mr. Putin?
I mean, it's being made at a government level. I mean, these turbines, and I think the one that we've been discussed was made by Siemens, they went to Canada, and then Canada said, well, we can't send it back because it's sanctioned, and then the EU had to intervene to say, no, it's okay, we'll make an exception. So these parts, these enormous turbines, are becoming instruments of international diplomacy and sanctions and economic warfare. It's fascinating.
So, well, help me understand what I actually need to look for tomorrow. With the ECB, we all get it. I know when the decision comes out. I know when the news conference is. I know precisely what to look for. Well, with Nord Stream 1 coming back online, I have no idea. All I know is that it's meant to happen at some point tomorrow. Will, can you walk me through step by step what you as a team will be looking for through tomorrow?
So the first stage is that traders expect it to come back from its annual maintenance. This afternoon they will make nominations, which is industry jargon for trying to book pipeline capacity for gas to flow through. They'll say how much gas they want to take out of the pipeline, and they'll make those orders, and there will be a response. Tomorrow morning, we will look for how much gas actually comes, and it's expected tomorrow morning, judging by Putin's comment, it will probably come at some point tomorrow morning. The key thing is just the volume of gas. Before the thing went down for maintenance, because of the lack of the compressor that went to Canada, that was Russia's story anyway, flows were only at 40% of normal. Traders will be looking to see if it comes back at that level, higher or a little bit below. Not entirely clear from Putin's statement where that will be. I think what's clear here is Putin and Gazprom and the Russian government want it to come back at a reduced level, and it gives them huge leverage to sort of just very crudely turn the dial up and down as we get towards winter. And sometimes we might get more gas, sometimes we might get a little less gas, but we'll know more by the time you're presenting tomorrow, Tom. We should see how much is coming through the pipeline.
Well, Will, while we're talking about volume, you had Ursula von der Leyen earlier saying that the EU is aiming to cut consumption by 45 BCM. Then you had Commissioner Simpson, the energy commissioner, saying that the gas cutoff may cause 30 BCM of a supply gap this winter. Can you just run us through where those numbers need to be to match?
Yeah, I mean, it's going to depend on how much gas comes from elsewhere as well, how much LNG they're able to get into the system, and how they're managing to battle those bottlenecks in terms of, they don't have LNG terminals in the right places. They're going to put temporary ones in. And also it depends on the weather, how much they manage to get into storage over the next few months. But the bottom line, I think, is the number that von der Leyen put today when they released their strategy, cutting gas consumption this winter by 15%. That's a very big number and will require a lot of behavioural changes, both from households and businesses within the European Union.
Hey, Will, thank you. Really important stuff. Will Kennedy there of Bloomberg over in the city of London. Katie, so by the time we come on air tomorrow, we'll have a decent idea of what's happening with the pipeline, apparently, and then it's on to the ECB.
Yeah, but does that change Christine Lagarde's decision, John, when there is still a question of for how long that gas will flow, in what amount that gas will flow, how that economically will play out across Europe?
This is difficult stuff, isn't it? It's 25 or 50 tomorrow, and I think that's kind of irrelevant for the bigger picture. Tom, we've asked the question how big that window, how small that window is for this ECB to hike in. We had a guest in the last hour. He was talking up 2%. On ECB rates, 2%. First thing Katie did was shrug her shoulders to say, really? 2%? That's going to be a big ask, Tom.
It's a huge ask. And John, I'm going to go back to run rate nominal GDP. We talk about terminal values. What's a terminal value of United States nominal GDP? I think optimists would say 4%, maybe even 5%. Can you say that of Europe? I don't think so.
I know you prefer British politics, Tom. The Prime Minister, Boris Johnson, just signed off from PMQs. His final
forever?
PMQs as Prime Minister. And I understand his parting words were, hasta la vista, baby. And then he dropped the mic. I think that's how it went, Tom. Just saw that headline cross. The other thing he said is that his successor should stay close to the Americans. Stay close to the Americans. Some parting words from the Prime Minister Boris Johnson, Tom.
But I'm confused in that it's July and he's not out. He's in office till September, right, John?
No more PMQs though. With
What,
Boris
they take
Johnson.
the summer off?
So the
or-
caretaker doesn't answer questions? Is that
I've
the
got
general?
no idea how this works, guys. You're looking at the wrong guy. Just because I've got the right accent doesn't mean I've got the knowledge to talk about
John,
this
we
stuff.
looked at the person in the room that eats Marmite. You came up,
I don't
so we're
eat.
asking
I
you.
don't eat Marmite. Tom, you eat Marmite.
Were you
Tom's trying
forced
to
to eat
convince
Marmite?
everybody else to eat Marmite.
Would you eat Marmite,
God,
Tom,
no, I tried
for
it once. It
breakfast?
was appalling.
I've got no interest in this stuff.
It's like the piece of sausage in a full English. I'm like, really?
Oh, right. Yes, the black pudding.
The black pudding, yes.
Yeah,
Why
with,
do they
like
call
the
it
pig,
pudding?
with the pig's blood in and stuff like that. You've
Gross.
eaten it. I've seen you eat it.
Good. Can you give me some new tang? Thanks.
Futures down 0.2% on the S&P from New York. This is Bloomberg.
We're still in an environment where you have the same headwinds we've had for most of the year.
The key to continued growth is the American consumer.
The big issue is that while inflation risk, in my mind, is on the way down, recession risk is on the way up.
We're looking for some pretty aggressive near-term hikes. And then I think that the Fed is going to relax a little bit.
My concern is that the ECB has been very, very late in actually going into a hiking cycle.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene at 8 a.m. on a Wednesday morning. It's a snooze fest Wednesday, maybe. Tomorrow, an ECB meeting of immense importance worldwide. Kaylee Lyons in for Lisa Abramowicz this morning. Lisa's on the edge of Everest, I guess. John, we've really got a frame here right now. We haven't really done this yet today. Lagarde's going to come out with statements at 7 o'clock, whatever, tomorrow, and then what happens?
Then what happens is we need to find out a few things. One, what they do with interest rates. The first interest rate hike in more than a decade. That's expected. 25 or 50, maybe a slight lean towards 50 over the last couple of days,
you think
given the
so?
reporting.
Okay.
Not for me personally, but Philip Lane is set to offer that proposal to the Governing Council. We'll see what they decide. I think most people, the consensus view, still 25. That's rates to start with. Then we need to work out what happens with the bond buying program. The new bond buying tool that's set to prevent fragmentation. I know that really gets you going. That's point two. The other issue, Italian politics, that's another one, Tom. And then I'll throw you in a second one as well. On top of that, on the ECB, you need to work out what happens with Russian gas as Nord Stream 1 comes back online. Tom, that's four things. 2 for the ECB and another 2 external to the ECB that you need to watch tomorrow.
And we've seen that through the morning here, Ursula von der Leyen in Brussels. For Americans, it's all a jumble, all confusing. John, we go back to observing the markets, and part of the markets is very good equity pricing the last 10, 15 days.
Really nice day of gains in yesterday's session on the S&P, Tom. Every single industry group positive. The earnings from Netflix, I'm not going to say they were good. They just weren't as bad as they guided us towards. If you're looking for 2 million subscriber losses and you end up with 1, I think we're skipping a very, very low bar. That stock up this morning by 6%. The big test for tech is next week, TK.
Yeah, Kaylee from Virginia. Thanks for watching, Kaylee. She emails in and says, hey, stupid, it's not 7 o'clock anymore. Look for the ECB in the 8 o'clock hour tomorrow. Kaylee, that was good to get that message in, Kaylee. Thanks you so much for keeping me on the straight and or narrow. Kaylee, I look at where we are in the heat wave. We talked to Anne-Marie Horton about it. I'm sorry, the silliness in Washington over climate, at the end of the day, it's not funny.
It's not. And this is a campaign issue for President Biden. This was something he campaigned on, wanting to be a climate president. And instead, what he has gotten is a pivot toward fossil fuels, asking oil producers to pump more because we're dealing with rampant inflation and high prices at the pump. On the climate issue, the messaging is very difficult for that reason. And of course, he would like to have gotten something done legislatively. Joe Manchin said, yeah, no, thank you. So he's going to announce, we think, some executive orders potentially today, but stop short of declaring an emergency.
John, I was frozen yesterday by the Sky video of a village in what they called Greater London, I don't know what that means, actually burning to the ground. Were you surprised by that?
Yeah, Tom, I was surprised about how hot it got very, very quickly, but it's faded. I'll say this, I'm unsurprised by the consequences, Tom, because ultimately we don't have the infrastructure to deal with any of it, do we?
No.
In the UK. It's unexpected. The question you've got to ask is whether you should expect more of it in the next few decades, Tom, and we're guided by the scientists to believe that's going to be the case.
I would urge you to become familiar, folks, with Bloomberg Green. We're trying to make a real responsible effort there to bring the science and mix it in with the emotion of climate change, whatever your thoughts are right now. John, I've got to look at the emotion of the market, and, well, you know, it's up 3-4 days. To me, the number one statistic, John, is a VIX 32 to a very good 24.43.
Futures come in a little bit. We're down 0.2% on the S&P. On the Nasdaq 100, we're down 0.1%. Yields in 5 basis points on a 10-year, 297. In the FX market, the euro just slightly weaker. We're down 1/3%, 101.96 going into Europe's big day, Tom, tomorrow.
Across economics in the market, Scott Clemens is noted at Brown Brothers Harriman for trenchant notes where in the middle of it, there's a single phrase, a single moment where he just stops and cuts to the chase. Scott, there it was with all your experience. Markets, when they turn quickly, don't they?
They turn quickly and they turn unpredictably. One of my favorite subscriptions is newspapers.com. I am not a paid promoter of them, but it's interesting to go back and look at what headlines we confronted on the days that market bottoms, like in March of 2020 or even in March of 2009. Markets are forward-looking mechanisms. They always bottom months, quarters, sometimes even a year before the news flow, the economic news flow begins to turn better.
Are we there right now?
I'm skeptical, Tom, and I think that predicting a market bottom is more a job for financial market historians than investors in the moment. If you pressed me on the issue, I would say it doesn't quite feel like it yet. We haven't seen the big outflows from equity mutual funds, and we don't seem to have had any of those capitulation sell-offs that typically mark the bottom of a market. We're about to head into the flow of second quarter earnings reports. I think companies may make the opportunity to kind of kitchen sink some of the numbers. That may be the next spate of bad news that sends the market lower.
Scott, can you imagine a bottom without a Fed pivot? That's what I'm trying to work out here, Scott. Can you really get that inflection point in the equity market without a Fed pivot? Because every single bottom of the last 5 years or so has coincided with the Fed making a change.
Yeah, you know, Jonathan, what may play out this time around is, of course, the Fed meets in a couple of weeks' time. I think they're likely to raise interest rates by 75 basis points. That's kind of a consensus expectation. But then there's a long stretch before the next Fed meeting in September. We get 2 additional inflation data reports, 2 additional labor market reports, and of course, Jackson Hole is in between that. So there's a real breathing space there for the Fed to ascertain what has monetary policy done so far. Is inflation genuinely coming down? Is most of our work done? And if the market concludes and the Fed concludes that most of their work is done, yeah, I think you could see a pivot in the market without any kind of real Fed pivot, just a change in market expectations.
Okay, well, obviously the Fed has to consider what is happening in the broader economy, not just on the inflation front, but on the growth side, on the employment side. You have a line in the notes you sent over that it's hard to call this a recession if the economy is adding hundreds of thousands of jobs per month, wages are rising, corporate profits are rising. We were just talking to Jim Bianco earlier, who said you can have job prints like this and still be in a recession. He thinks we're there. Why do you disagree?
Well, I think, Kaylee, like so many other parts of this economy, we're still living in the ripple effect coming out of the pandemic-driven economy. So we could very easily get another negative GDP print for the second quarter of this year. And of course, it was slightly negative in the first, and that's 2 consecutive quarters, and there's your recession. However, given the importance of the consumer in the economy, almost 70% of GDP, we've added 2.7 million jobs in the first half of this year, and I know a lot of that's recovery. It's not really job additions. Wages are growing. Retail sales are growing. Yeah, could you get enough of a slowdown to technically qualify as a recession? Yeah, but honestly, I think that becomes more of a semantic argument than it becomes an economic argument.
Great to catch up, Scott. As always, Scott Clemens there, Brown Brothers Harriman, on the latest in this equity market. Tom had a lot of back and forth yesterday about those inflection points in equity markets coinciding with the Fed going max dovish. Hard to believe they're going max dovish anytime soon. Whether it's sufficient enough, though, just to take a pause later this year, does that get it done? Do you remember the September pause of a month or so ago? Do you remember when that started to gain some traction quickly and then that quickly faded?
My best thing about market bottoms is the way you learn you can't find them is to enjoy losing money, which I have enjoyed losing money trying to game about him.
What did Bianco of Bianco Research say this morning, Tom? He said inflation has peaked as the new inflation is transitory. Some pushback from him this morning.
Yeah, well, the inflation question is very good. And, 9.4% in the United Kingdom is a wow statistic. And the other thing, John, and I think UK is leading on this, is a difference in wage gains among private employees versus public employees. That's a tinderbox ready to explode in America.
I know, Tom, in a big way. And what we're going to see, strikes potentially. We're seeing more of that across Europe, TK, much, much more of that. It's hard to imagine things get easier in Europe, particularly anytime soon. That we haven't seen the worst of it seems to be the take at the moment.
And John, I have trouble with the people who say the striking this time around is different than the 70s. If we get an inflation that persists like the 70s, I think all bets are off on that idea.
You would know, given the history of the labour market, though, given the fact that the union membership is so much lower now versus then, Tom, the pass-through from headline inflation into wages has been tempered somewhat. I don't think that gets talked about enough, TK, that if we had union membership as high as it was back then, can you imagine the pass-through to wage growth, headline inflation, and how that can spiral really quickly?
There's a lot of work on that, and I think Germany, sort of the guild structure of Germany goes to that as being maybe the last vestige of it. There's certainly some of it within the public offices within the United States as well. John, what I would look at again is the economic growth that we're going to learn about in the guidance of earnings. It really starts with Tesla today and then into the tech companies next week. And frankly, the non-tech, the ones we don't talk about this time around, John, are very visible, very important.
Much more about next week, Tom. I'm totally with you. Microsoft, Alphabet, Tuesday, Facebook next Wednesday, Amazon, Apple on Thursday. Got a Fed decision sandwiched in there as well, TK.
I did this yesterday, John. This is important. Last night the Red Sox weren't losing, so I had to do something.
Well, they weren't playing, were they?
Yeah, but they weren't losing. So, I looked at a famous toothpaste company, and I really read their first quarter report. And it was all about how do we recover from a 200 basis point margin decline. Price increase, innovation, and resizing, about putting 4 tomatoes, in the box that used to have 5 tomatoes.
Instead of 5 or 6. Yeah. Who's this guy, Giancarlo Stanton, Tom? Doug Cass keeps talking about
That's good. Nice of you to bring that up.
Yeah.
It's a conspiracy.
Is he good?
Conspiracy? Okay.
I've watched him play.
You're a Yankees fan?
I've watched him play.
One of my interns is a Yankees fan. How the hell did that happen,
I always say I'm
John?
so impressed by Aaron Judge. Aaron Judge is massive, Tom.
He's massive.
That guy's a giant.
Yeah, he's a giant.
He's
a real deal.
You go and watch the Yankees and seeing that guy in real life.
I guess he's done with the Yankees. I don't know. He'd look good in a Red Sox uniform.
I'm sure you'd love that, wouldn't you?
Yeah.
Futures unchanged on the S&P from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Rishi Sunak may end up on top today when Conservative members of Parliament vote to decide which 2 candidates will battle to replace Prime Minister Boris Johnson. Sunak finished first in Tuesday's 4th ballot. It's the battle for second that's heating up. Foreign Secretary Liz Truss is now the favourite to join Sunak in the final ballot. In Italy, Prime Minister Mario Draghi has told the Senate that his coalition can be rebuilt. That's easing concerns that Draghi will quit the government and throw the country into chaos. Markets rallied after his comments. Last week, Draghi said he wanted to resign because he didn't have the backing of all the parties in his coalition. Economists at Citigroup have labelled a global recession a clear and present danger. They say there is a 50% chance of a slump in a report to clients. Citi economists said they now expect the world economy to grow 2.9% this year and 2.6% in 2023. That's slightly lower than previously. Apple shipments probably surged last month in China after lockdowns were lifted. According to data from Beijing, China's mobile phone shipments jumped 9.2% in June. Overseas companies such as Apple and Samsung led the way, whilst the market share of domestic phone makers fell. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
So we think the dollar can still rise further. We think the DXY will move up to around 112 by the third quarter. That's on the back of the fact that we think the Fed is much more likely to meet or beat implied rate expectations than the ECB.
Andrew Sheets there, the chief cross-asset strategist at Morgan Stanley. 112 on the dollar index right now. We're just short of 107. That gives you an idea of how much upside they think still exists on that particular index. That currency could get a whole lot stronger. Where does that leave the euro? The euro right now looks like this. Euro dollar a little weaker on the euro side of things, going into a big day for the ECB. Euro dollar 101.96. We're negative a third of 1%. A big day for the ECB, for European gas supply, and maybe even Italian politics too. I cannot keep up. Futures, Tom, down by just 0.06%, and yields down too by 5 basis points.
We've been
297.
Been making jokes about it today, John. I've been a little guilty about this, folks. I really can't emphasize enough how important tomorrow is. This is truly the most historic ECB meeting ever, wrapped into everything else, including the war, wrapped in Putin's trip to Iran and all that, John. Tomorrow we shouldn't take lightly.
We went a full 8 years with Draghi without a single rate hike, Tom.
Yeah.
We thought that maybe Lagarde would face the same situation. The answer to that is clearly no. What we're trying to work out is actually how far interest rates can go at the ECB, given everything going on all around her.
And the unpredictable right now, we turn, as we did with Amory Horton in the last hour, to this climate debate in a very hot America. Washington, D.C., normal, 101, 102 here in a couple days, but it is a serious issue. Greg Villiers knows the heat of our political discussion on climate change and joins us this morning. He's Chief U.S. Policy Strategist at AGF. Greg, we all know the divide here and the debate. Is there any center tendency? Are the Republicans in the middle? Are the Democrats in the middle on climate change?
Frankly, Tom, I don't think they know what to do. Joe Biden probably today or later this week will declare a climate emergency. I'm not quite sure what that would do. Maybe he'll talk about banning exports or stopping any new drilling. But the Supreme Court ruling of about a month ago was really epic in the whole idea of regulatory policy. The court said that to have big regulatory changes, you've got to have collaboration with Congress. So even if Biden makes a strong statement today, I'm not sure he gets much done.
Who are you watching in Washington where anything gets done on climate change either way? Are you going to give me the gentleman from West Virginia? I mean, is he the climate czar of Washington when everything's said and done?
To a certain extent. I mean, Joe Manchin's influence has been just enormous. He's enraged Democrats, as you know, and I think that his clout will persist. Frankly, I don't see much improvement on environmental policy, and I've got to conclude that the environmental movement is in tatters. This year, there's so much, as you and John were just saying, there's so much going on, but one of the big stories this year is the collapse of the environmental movement.
Okay, so the environmental movement is in tatters. What about the Democratic Party, which, to your point about Democrats being so angry at one of their own, Joe Manchin, who seemed to have issues with the policies or, not pushing far enough on the part of the Biden administration, the Democratic Party itself seems quite fractured.
They sure are. And basically, they don't have the votes to get much done. And you've got an environment right now where voters care more about the price of gasoline, which has come down a little, than any other issue. And I think because of that, people are willing to look the other way on environmental stuff, even fires in London and temperatures over 100 degrees, because they want lower gasoline prices.
Well, and obviously that's going to color the midterm elections in November in a very big way. When we look out to 2024, though, Greg, is there anyone in Washington who would like to see President Biden run for re-election, including those in his own party?
Very few. In public, I think a lot of Democrats say, he's the nominee. We're not going to oppose him. In private, you talk to a lot of Democrats who are quite blunt about Biden's age. It's harsh to talk about that. But I do think that most Democrats would like to get a fresher face.
Greg Villiers, I looked at a chart today of the drop of the water level near the Hoover Dam. And it's precipitous is the word. There's no comparison all the way back to 1942. How do Republicans frame climate change in the geographies where there's a lot of Republicans and without question, there's climate change?
A lot of Republicans don't believe there's climate change. A lot of Republicans think Donald Trump won the last election. I mean, there are attitudes that you have to look at as big political factors.
Yeah, but Greg, the water level of Hoover Dam is not a theory. It's measurable.
I know. 100-degree temperatures are not a theory either. And I would add that I think the next big crisis, I hate to say this, is California, which still has not had the winter, the summer fire season. I think fires in California in August are going to be a big issue for a state that's running out of water, dramatically running out of water. And you have to wonder, is there some cure here? Is there desalinization? It's really expensive, but I think desalinization might come back into the mix of policy options.
Greg, also want to get your view on things, as always. Greg Valliere there of AGF Investments. TK, seemingly every time you look anywhere right now, it seems to be problematic. The doom and gloom, you're always saying it, Tom. How much doom and gloom is out there at the moment in every aspect of every conversation?
You know, you got to battle it every day, and particularly late pandemic here, even with a little bit of the variant issue going on now. I know with the kids every day, you know, seriously, John, you got to find the optimism that's out there. John, can I do a surveillance correction?
Sure. What?
I was making jokes about Bramo on her trip.
Right.
I had no idea.
Is she right in?
It's like what you do if you go to Everest and you're not going high up. You go from Kathmandu, and it's a really huge hike, and you do some airplanes with it as well. But she's going as high as 18,000 feet. I had no idea.
Have you got confirmation of that?
Yeah, I've never been that high. I've been up to like 12,000 feet, and I didn't feel good. That's like way up there.
And you had Kaylee reading calculus to get ready for the show.
Yeah, but seriously, John, 18,000 feet. I don't think she needs oxygen, but you know, maybe she needs a cream ale. But the bottom line, John, is I really just had no idea how high you go on a casual hike if you just decide to go to Nepal.
Is she going to take a week off, Tom, afterwards to recover?
Why not? That seems to be the new habit.
That seems to be the theme. Equities right now down 1/3% on the S&P. On the Nasdaq, we're down 1/4%. We will keep things on the rail for you tomorrow. The focus will be on Europe, an ECB rate decision, a bond buying decision when it comes to some kind of anti-fragmentation tool. The latest on Italian politics.
Transmission protection mechanism.
There we go. That's great all round, guys. Put that in a promo. On top of that, we need to work out what happens with European gas. Do you want to take us out with that doom, Tom? Anti-fragmentation tool. Go on, you've got that.
I looked
What's
it
the
up in
voiceover?
Italian. It's fragmenteco or something. I can't pronounce it.
Nice. From New York City this morning. Good morning. Equity futures just a bit softer. We're down 1/3% on the S&P 500. On the Nasdaq, we're down by 0.2%. Yields are lower by, let's call it 7 basis points and round down for you to 295.40 on a 10-year, down 1.8% on crude, 102.33. Big spat over energy supply out of Russia into Europe. That will continue, perhaps even conclude tomorrow. We'll look out for the latest there. Euro dollar 101.92. We're negative 1/3%. Weaker euro. Just want to keep you up to speed on Netflix. That stock was higher by 6 or 7%. It was flying. Now up by just 5%. Just rolling over a little bit in the last 30 minutes or so after they skipped over an extremely low bar. We were looking for a 2 million subscriber loss, and Tom, we got something like 1 million subscriber loss.
I was talking to Paul Sweeney about this, and you know, Paul said, forget about the financials. What's the Rotten Tomatoes on this new $200 million epic they've got coming out? And the answer is it's not very good.
What is it? Stranger Things?
No. That's
the old one. What's the new
Afterthought
one?
is watching Stranger Things. She wants the name changed to 12. The Gray Man.
The Gray Man.
Something like
don't
that.
we rely on Kaylee for this?
No, well, Kaylee's the
she's
Scarlet
sort of super into Peaky Blinders and all of that stuff.
That's true. And Ryan Gosling, who I believe is in that feature film.
Gray Man.
Gray Man.
Okay.
Comes out Friday.
So it's a movie.
Yes.
Right, thank you.
Oh, it's a movie. It's not like a series?
I think.
I think we're revealing how much we
Let me
actually
Google
know
real quick.
about this.
We're on Netflix.
Cool.
Let's save ourselves right now. Futures
It is a
negative
movie.
10. Dow, I'm sorry, folks, the VIX is 24.60, and that is testament to what we've seen over the last 3-4 weeks as well. Blarina Urici is a U.S. economist at T. Rowe Price with a really different outlook. And what we haven't talked about this morning, Blarina, is the labor market. And I want to talk about all the gloom that's out there amid 3.6% unemployment. You lead with that in your note.
Absolutely. I think I'm taking a lot of signal from the health and strength of the U.S. labor market. It surprised us consistently to the upside this year. Job creation at 350K per month on a 3-month average basis. We know the Fed looks at this. It's pretty strong. And the unemployment rate is all the way down to pre-pandemic levels when we had a hot and very strong labor market. I think the labor market will matter a lot for the outlook of the U.S. consumer and their confidence to continue spending in the coming quarters. So from that, I think the doom and gloom on recession is a little bit exaggerated at the moment.
We parse inflation as services and goods. How do you parse the labor economy? Is it the recovery that we saw in restaurants and bars was a theme a year and a half ago or so? Where is that persistency of good news in labor now? What part of our labor market?
So what we're seeing is a broadly based growth in job creation. And I think this is what kept job growth going for so many months. Now, this could turn around quickly, especially if we talk ourselves into a recession. But for a moment, I think let's pay attention to what we're hearing from companies, their hiring intentions over the coming few months. And right now we're seeing hiring freezes or small job cuts predominantly in the tech and finance sector. I think if we see this being more broadly based in other sectors of the economy, this is when we need to start getting worried about the outlook for the U.S. job market.
Can we talk about the housing market as well? Because we've had a series of data points that just point to a really dramatic cooling. And Diane Swank, who's now chief economist over at KPMG, was talking about how we saw mortgage demand dropping to a 22-year low in data this morning. She says the canary in the coal mine has lost its song. The correction in housing, the most interest rate sensitive sector, is leading the economy into a more significant slowdown or worse. Should we be more worried about how quickly the housing market is cooling off?
I think this is a great question. We should focus on two things in the housing market. We're seeing a deterioration because of bad affordability. Homes became very unaffordable for households because of the very fast home price appreciation post-pandemic and because of higher interest rates. We know the housing market is one of the most interest rate sensitive sectors of the U.S. economy, but we should be careful to extrapolate what's happening with home sales to the broader economy. We know this is one of the most interest rate sensitive sectors, but I'm at this point not convinced that this kind of dramatic slowdown is going to spread to consumer spending because of how healthy their balance sheets are, how healthy the labor market is, and their ability to absorb some of the inflationary hits in the cash buffer that we know they've accumulated.
But given that, doesn't that mean that the Federal Reserve's job in trying to rein in demand in order to get inflation down is then that much harder? Is the U.S. consumer too resilient for them to be effective in doing that?
I think therein lies the problem for the Fed. We have a very strong economy, and they're trying to walk this tightrope of bringing inflation down while the unemployment rate only picks up a little bit because this will be absorbed in the job openings that are at record highs at the moment. I think we should be prepared for a Fed that needs to hike more than the markets are anticipating right now.
Blarina, your job at T. Rowe Price is to talk to portfolio managers about sector bets and even individual stock bets, and it starts and ends with unit dynamics and price dynamics of the revenue line. What are you telling them about what revenues will do over the next 12 months?
So I focus a lot on the U.S. consumer, and we've spoken a fair bit about it already today. And so I think what happens with consumer spending over the coming months will be key for revenues. Of course, we're going to have a correction from the levels that we saw last year that was unsustainably high spending for the U.S. consumer, but we're shifting our view to focusing more on the services sector where we think the economy is going to rebalance and towards those staples as activity normalizes and all the pent-up demand on goods and services gets absorbed, focus on those necessities and non-discretionary spending for the consumer.
Well, if the consumer's there, and you know, I see Atlanta GDP, not Atlantic, Atlanta GDP statistics that are really quite gloomy. Should we trust those statistics, or is the resilient consumer going to surprise all?
I think with every data report, we should really look under the hood and see what the details of that report are telling us. And what we're seeing in the NEPA accounts, in the GDP numbers, is that a lot of this weakness and volatility is being driven by inventory restocking and destocking, by net trade, two components that tend to be very volatile. So over the coming months, we're going to sit here and discuss at great length the signal from GDP versus GDI data. Should we focus on personal consumers and domestic sales? And I think there's going to be a lot of debate on this, but ultimately, we should focus on consumer spending, and we should focus on how fast jobs are being created in the economy.
Well, something else we're likely to debate over several months is what size Fed hike we're going to get at any given month. But perhaps the more important conversation is where we ultimately are going to get. We've heard from Blackstone in the last 24 hours saying could be close to 5% on Fed funds when all is said and done. Jim Bianco agreed with that take. So I guess kind of a three-part question. How high do you think we get on Fed's funds? At what point do we reach it? And for how long do we stay there before the cuts follow?
So I think that we probably get to 4% interest rates by the end of this year before the Fed takes an opportunity to pause and see the effects of tightening financial conditions on the labor market and on inflation. And then I think risks for next year are pretty wide. If the economy continues to grow and surprise us to the upside, 5% interest rates, it's not unthinkable. If the Fed thinks this is necessary to bring inflation down, they will go ahead and do that. They've told us they really prioritize price stability at this point. When I look at market pricing, I think they're being a little bit too sanguine about the Fed cutting interest rates already next year. I don't think it's going to be as simple as that in this business cycle.
Sonal Desai of Franklin Templeton said pretty much the same thing to us recently. Florina Urici there, the US economist, the T. Rowe Price, echoing some of that from Sonal, and also Andrew Hollenhorst of Citi, Tom, looking for 4% year-end on Fed funds.
I'm glad you bring this up, John. This is still not in the market at all as a set of people looking for a terminal rate above 4%. It's just not priced in.
We're talking about rate cuts next year, and some people saying that's premature.
Right.
Next week, Tom, Fed decision Wednesday, GDP the day after.
Well, the GDP number is going to be a big mystery. I like what we heard earlier from, maybe it was Scott Clemens, where there's a gap there between Fed meetings where we get a lot of data. Margot Rubin with our affiliate BNN, John, in Canada, 8.1% inflation back to January 1983.
Downside surprise, though, Tom. On a month, they hiked 100 basis points.
Yeah,
so, timing. I know. There's some work to do, Tom. These are numbers we haven't seen in a long, long time. Likewise, the UK.
Yeah.
You mentioned that briefly this morning. New 40-year high.
Can I note curve inversion, breaking down, breaking ever more inverted, except for one day?
I'd say the whole curve, Tom, shifting lower this morning. It's just the 10 years coming down a whole lot more. We're down 7 or 8 basis points already, sub 295 on a 10-year.
Well, sub 295, but the 2-year yield at 3.17%. to me speaks volumes. I don't know. We don't get economic data here. It's 8:40. I guess we missed that, right? No economic data today.
What are you looking for, Tom? We get existing home sales at 10 a.m. We had mortgage applications earlier this morning. Okay. They were soggy, down more than 6%.
I like that.
Soggy. Soaking wet.
Yeah.
Coming up, Troy Gajewski. I'll catch up with Troy. We'll talk about markets, believe it or not. Troy doesn't think that this market mess is done with, that there's some more volatility still to come.
Everybody's got an opinion.
Well, that's his opinion. I'm going to talk about Troy's opinion, Tom.
He never
that's the whole
comes
point.
on with me.
He does. He comes on Bloomberg Surveillance.
He's like El Arian. They won't get up early.
Oh, Tom, you're rude about them sometimes.
He's made an appearance on Bloomberg Crypto, too.
I bet he has. Got a lot to
Why
say
am I
about that, too.
Did you survive the show yesterday, Kaylee?
I did, yes. Quite successful.
Good to hear.
I
saw some of it. Great work, as always.
You.
Tom, have you booked the United flight from... Is it Newark to Frankfurt? Have you done that?
I'm talking. I'm trying to leave right from here. I got to get I left my passport at home, so, a vet bill's going to bring it down.
Very cool. Your dog with your passport.
Yeah, it's
okay.
It's like a carrier pigeon, but with 4 legs.
I got to go. We're down a third of 1% on the S&P. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. President Biden will announce executive action today to confront climate change. One provision would steer federal dollars to communities ravaged by heat. For now, though, the president is holding off on an emergency decree that would allow him to use sweeping powers against global warming. The House has passed a bill that would recognize same-sex marriage under federal law. It also would extend legal protections to all married couples. That's a reaction to concern that the Supreme Court might reconsider a ruling extending those rights. The legislation faces long odds in the Senate. In China, Premier Li Keqiang is signaling flexibility on the country's economic growth rate. According to state media accounts of Li's comments to global business leaders, he said the most important thing was to keep employment and prices stable. Li also said China would make its COVID control measures more targeted. And Tesla reports earnings after the closing bell today, and the electric car maker's run of rising sales and profit is under pressure. During the second quarter, Tesla faced challenges, including supply chain difficulties and lockdowns in China that hurt its ability to make cars. And JP Morgan Chase reportedly plans to move 1,000 back office staff from London to either Paris or Frankfurt. That's according to French financial newspaper Le Echos. JP Morgan's Paris office has expanded significantly since before the UK quit the European Union. The ECB has been pushing US banks to increase their EU-based capabilities. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Valuations are at a much more reasonable place than they were 12 months ago. I think we're closer to a bottom. I think the market's in the process of making a bottom, but all of the conditions that led to the volatility, unfortunately, they have not gone away yet.
Russ Kostrich, always smart, portfolio manager, BlackRock, barely describes how he synthesizes in where we are in the market with his opinion, the BlackRock opinion as well. Kaylee Lyons and Tom Keene here on a Wednesday. I've called it a snooze fest. Actually been very interesting was certainly the political statement of the day out of Brussels and Ursula von der Leyen really talking about the Nord Stream issue. It moved the markets. Green on the screen has become red on the screen with some weight. I'd really note curve inversion, negative 23 basis points is out there this morning, a greater curve inversion. The 2-year yield higher than the 10-year yield. I think I'm getting that right. Ira Jersey has to help me with that. I usually get
Sounds about right, Tom.
Wrong. Right now, we are going to advance to a study of the advanced decline line with Kriti Gupta. Kriti, what do you have?
Well, Tom, we got to take a little bit of a blast to the past. In the last 24 hours, yesterday's rally was so significant because it was the broadest going all the way back into 2020. And that brings me to my chart of the day, because traditionally when you see that kind of broad rally, it is good news in that there isn't necessarily a defensive tilt or perhaps a cyclical tilt to it. The entire market is rallying, and on top of that, you had some high volume as well. So perhaps conviction buying on the surface. So my chart of the day shows just that. The advanced decline line, essentially how many S&P 500 stocks are positive minus how many ended the day negative. And really, if you go back to 2020, 2021, you see this massive rally. But of course, in 2022, with that sell-off, you've seen that advanced decline line really just stall out. So the question here is we do need to see a little bit more of that breadth to perhaps have that sustainable rebound. At least that's what we saw in the past couple of years. But I will also point out the other side of the argument, Tom, the idea that Chris Murphy over at Susquehanna, he said, well, yeah, we had a broad rally, 98% of stocks, they were positive. That being said, that traditionally, historically, has also led to some sort of correction or mini correction in the 1 to 2 weeks that follow. So really, two ways to read the situation here.
Kriti Gupta, thank you so much. Greatly appreciate that. Making the news this morning, viral on Twitter, was Kaylee Lyons studying calculus. We now go to the calculus of boredom, which is tartar and toothpaste. We can do that with Gina Martin Adams, Chief Equity Strategist at Bloomberg Intelligence. I want to talk about the calculus of boring toothpaste companies and the reality they face, like others, and Netflix can't deal with, or others, which is margin compression.
Yeah.
How do companies deal with inflation and the margin compression it brings on the income statement?
Yeah. Well, I'm happy to bring the boredom to the show here this morning.
Oh, no, I accomplished that earlier.
Nonetheless, At this stage in the cycle, you start to hear about cost cutting. You start to hear about cost cutting. You start to hear about cost rationalization. We've already heard it for several weeks running from the tech space. We're starting to hear it from more companies over the course of the earnings season. We've heard financials even talk about potentially cutting back on labor cost input. And increasingly, that's the way that companies accomplish ultimately creating stability in their margin lines. That said, the primary source of instability for margins has really been inflation and commodities costs. So they're going to get some support from that no matter what they do, because we have seen energy costs turn over. We've seen the grains turn over. We've seen the metal prices turn over. There has been some reprieve in commodity costs.
And folks, it's like Game of Thrones in season 5. Gina Martin Adams has like literally 3,000 people out on a floor, and, the smoke and the chemicals of making Bloomberg Intelligence. Within all the people you talk to every day, the marketing phrase I get is they're going to innovate themselves forward. Baloney. Yeah. They never do that, right?
Not at this stage of the cycle. It really is about cutting costs to sustain margins. And then when they gather the confidence in the economic climate improving, they start to innovate and start to spend. Now, there are exceptions to that rule. Certainly, there are groups in the healthcare and technology space that spend an enormous amount on R&D and constantly are evaluating projects with a reasonable return on investment, no matter what the stage of the cycle is. But broadly, when we're talking about the S&P 500, in a time when operating margins are coming under some degree of pressure, they have to pull the levers that they have to pull to stabilize those margins. And I do believe we've finally gotten to this point. I mean, I've been talking about margin weakness for more than a year now, as analysts have just slowly started to pick away at their margin estimates. And we are starting to see roughly half of the industries in the S&P 500 with declines in year-over-year margin showing up in the real data. At that point in time, you would expect companies to start to rationalize cost.
Okay, so Gina, obviously you were talking about how they may get some relief when it comes to commodities prices coming down. We are seeing not really just kind of the dollar starting to come down, but it's still hovering around its strongest level going back to the early 2000s. How real are these FX headwinds? Because already, not that far into earnings season, we see company after company saying, yeah, it was FX.
Yeah, they're real, but there's not a ton that a company can do about those real FX headwinds. So for about 35% of the S&P 500 constituents, a stronger dollar is a very bad thing. A stronger dollar is going to translate into lower earnings because they do have substantial multinational businesses. Most of that dollar weakness or that dollar strength is coming via euro weakness, so it's particularly profound for companies that have exposure to Europe. That said, I think the underappreciated story here is the companies that are importing costs are actually getting a benefit because the dollar is so strong. So what I think you're going to see throughout this earnings season, nobody will say, hey, things got better because the dollar was so strong. But nonetheless, you've got several consumer companies, consumer staples, consumer discretionary, some select industrials companies that are heavy importers of product from overseas. To the extent they import and the dollar is rising, their import cost pressure is mitigated. That could be something of a hidden support to margins that nobody's really talking about that we might see emerge in the next few weeks.
Gina Martin Adams, thanks so much. Folks, a given toothpaste company, the name doesn't matter right now, 30 years per year, 14.6%, 20 years per year, a big 17.6% per year. The last decade, 14.2% per year. This is not Apple. It's not some fancy la-di-da, Bitcoin, whatever. Boring toothpaste.
Yeah, nothing more exciting than oral hygiene.
Boring toothpaste is all that comes down to. Kaylee, what did we learn today?
Well, I think we learned how difficult tomorrow is going to be. That's the primary message of today, Tom.
John did a nice job of laying that out.
The ECB is stuck between a rock and a hard place as you have the question around what is going to happen with Nord Stream 1 tomorrow. If gas starts flowing, how much gas starts flowing. Then, of course, you have the question of Italian politics, what that is going to do to the BTP Bund spread. Does it blow out beyond 200 basis points? All of this, Christine Lagarde has to take into account as she is trying to hike rates to tame inflation. It is not a spot I would want to be in.
Oh, a little bit of nervous here into the market. DXY's churned through the morning. We're not at that 108 level, which is strong U.S. dollar. The DXY index heavily influenced by euro back down to a 107, rounded up. Euro 102.06, and of course that will bear close watching tomorrow. In the equity markets, in this great, I don't know, it's an intermediate up in a bear market. nascent bull market. I'll let you decide as you watch Bloomberg and listen to Bloomberg through the day. But the fact is, green on the screen again like yesterday, and then down we went off Putin-Ukraine worries, I'll say. And we've come back a little bit. Futures at -4, Dow futures -38, and the VIX flattish 24.54 as well. Again, tomorrow, our coverage of the meetings of the European Central Bank and the press conference of their president, Lagarde. Stay with us. This is Bloomberg.